live with YouTube? I hope so, Andy. Andy, you know you don't have to do that alone, right? If anything ever happens, man, all you got to do is get with Jason. Let him fix it. Let him fix it, man. Anything technical, I refuse to hope. If I can't fix it, I go straight to him. Because, man, he's so much smarter than I am with tech stuff. Did I get a target filled? That's weird that you heard that, Ron, but yeah, I did get target filled. Which is always a good thing. Always a good thing, guys. I love it when my targets get filled. Good morning. Welcome to the room. Happy to have you guys here. Man, it won't be long, Andy. Oh, I was talking to John this morning. We should be test driving this afternoon the funding page and using different platforms to start working through the accounts. And man, they're working hard. They're working hard. Steve Diego, so I don't know how it is in California, but in Texas, on every little grid, there's these transformers that the power for the block or a couple blocks go through. And just every now and then they blow, and it blew. I mean, this has been happening since I was a little kid, so it's not a big deal. You hear a pop, everything goes black, and within an hour they usually have it fixed. So yeah. Good morning to everybody. A lot of good mornings in here, man. It's good to see all you guys. Great to have you. Steve Diego, I did try to send you a message yesterday. I checked your charts yesterday, dude. Everything was solid, so great. Jay, let me see if I can get that answer for you. One of the things, let me see if I can find it. Good morning, happy Friday, Mike. So John gave us a list of the platforms that are going to be available. And let me see if Thinkorswim is on there. And guys, it's Friday. We're gonna slow roll, have some fun. So this is kind of what he said. This isn't, guys, until it comes out, nothing is set in stone. Please understand that. But I do not see Thinkorswim on there, Jay. But for now, that's where John was at. That's what he saw. That's what they told him. So I don't know if that's going to change or not. We'll find out. Who knows? Man, I love everybody's so eager to be here today. That makes me so happy. Nice to have you guys here. Let's do what we do, guys. And guys, oh my gosh, I had a million things in my head that I wanted to say this morning. And now, I don't know. So let's talk about news first, guys. We're always checking news in the morning. Thanks, Ron. That's true. ForexFactory.com/calendar, guys. This is where we know when those news releases are going to be. This is when we know that the talking heads may say something that upsets a trader. And traders being upset, especially the influential ones, guys, they can create these crazy movements in the market. A lot of silly, a lot of bouncing, a lot of speed, almost too hard to read. So every morning, I check news and I say, hey, what's going on? I'm looking for high impact and I'm looking for medium impact, guys. And at 10 a.m. today, we're going to have that U of M consumer sentiment and inflation expectations. It is medium impact. Which means that it could move the market a little bit. I just do this every day and I want to make sure that I don't trade into it. Because guys, when my indicators are moving too fast to read, well, that creates challenges. I need to be able to get the accurate information so that I know whether or not it's time to take the trade. So we're going to do today what we did yesterday, guys. And I'm going to tell you, I promise, I'm going to give you everything that you need this morning to be successful, I can't talk, with the software. Everything that you need, guys. The only thing that I'm not going to be able to give you is the experience and the repetition. And guys, I'm going to be very, very precise in the language that I use and in the language that I believe you should use to find the highest level of success. You tell HR whatever you want. I think I am HR. I might be HR. Guys, from the Nexgen website, This is where all the answers come from. Or my brother's HR, so we're pretty good. Nepotism, guys. You can't fight it. I'm going to go to the glossary of common terms. I'm going to try to go to the glossary of common terms. It's not letting me go to the glossary of common terms. Man, I may need to get Chris to double check the website and see what's going on. There it is, little F5. Guys, we're going to talk about this morning a high probability trend trade. And we're going to do this for about an hour. We're going to talk about this high probability trend trade because this is a trade that typically wins 70 to 80% of the time if you just follow the rules, guys. This is a trade that creates an enormous amount of confidence through your memory of success. And this is the trade that's going to teach you how to read your indicators. And that's my goal. And some of you need to listen very, very closely to this part. Some of you need to take what I'm about to say and absorb it and really, really, really live it each and every day. Guys, reading your indicators is 90% of your day. Doing absolutely nothing is 90% of your day. Not being in the market is 90% of your day, guys. One of the things that Nexgen is going to do for you, one of the things that you're going to do for yourself, is you're going to be able to recognize some very basic advantages with some very strong language attached to recognition. And you're going to be able to say to yourself, I have an advantage or I don't. And you're going to have to learn to push down that monster that wants to keep you busy. You're going to have to learn how to do nothing, guys. We're not traders. We are professional waiters. But the great thing is that if we get really good at waiting, we're going to put ourselves into the market when the advantages are there and the edge is present. So there are 3 trading rules, guys, that we're going to talk about. And once you learn to read your charts, and that's it, 2 minutes and 6 a.m., Rob. Once you learn to read your charts, you're going to be able to look at your indicators, and it's a lot of fun. It makes me feel smart some days. You're going to understand where the market is likely to continue. And this continuation point is going to be your entry for this highest probability trend trade. You're going to look at a chart and say, oh my gosh, this is where the trend is most likely to continue. I can't wait to get in there. And then you're going to understand where the market is likely to go, and this is going to help you create stop or targets. And you're going to understand where the market is likely to stop. And guys, likely to stop is what we call a termination condition. And it has the easiest recipe ever to identify them. But the likely to stop areas, guys, these are the ones that trip up the new users. These are the ones that break accounts, guys. Rule number 2 for the high probability trend trade is the most broken rule. Because rule number 2 is typically the rule that's going to keep you in that 90%. So I want you to pay close attention, because what we're going to do is we're going to keep you guys from driving your brand new shiny car into brick walls. The high probability trend trade is 3 rules. That's it, 3 rules. Don't overcomplicate it. Don't add addendums. Don't add anything. Just let it be basic. Each rule creates an advantage, or identifies an advantage. I suppose it doesn't create it. Your first rule is going to give you the advantage of momentum. When you have momentum, you have a market that is likely to continue in the direction of the trend. Your second rule is going to define the areas that could stop or reverse the market. And the rule says don't trade into those. And if you don't trade into those, you're going to have room to your profit targets. And this is what we're going to call a clear path. That's your second advantage. Once you understand momentum and clear path, you have everything you need to be successful with the software. Once you can identify strong trigger lines, once you can identify termination conditions and know when they're broken, you have everything that you need to be successful with the software. You have the advantages that will come into play that will allow you to create a consistent, profitable plan. Initially, we're going to add a third rule. The third rule is the entry for the highest probability trend trade. And this is going to pinpoint exactly where the market is most likely to continue. And this precision is going to allow you to reduce risk, and it will allow you to maximize profit potential. These 3 rules, ladies and gentlemen, are going to come to be on only 2 charts. More specifically, The first two rules will be identifiable through the first bar, the most current bar, the bar that is bouncing up and down on your large chart. Your large chart is a slow-moving chart. It's a very broad stroke of a brush, guys. And the large chart is going to define the direction of the market. It's going to let you know whether you should be looking for rules to be met to go up or down. The large chart is going to define the momentum in the market through those strong trigger lines, rule number one. And the large chart will identify the areas that could be problematic. Guys, that's rule number two. All of that happens on the large chart. And if you can train your brain from day one, don't even look at an entry chart until the rules are met on the large chart, guys. You're going to be working with 66% of the good stuff. And these two advantages really are enough to find more opportunities. What we're going to do with the high probability trend trade is we're going to use a smaller chart, a refinement chart. And guys, this refinement chart is going to show you the inner workings of that most current bar. This refinement chart is going to allow you to pinpoint precisely where the market is most likely to continue. And guys, that becomes your entry for the highest probability trend trade. Your large chart is a one-bar affair. And because it's such a slow-moving chart, you're not going to see any change. Those advantages are going to hold true. Your small chart is going to show you the inner workings of the bar, guys. And we use these little shove backs to pinpoint precisely where the market is most likely to continue. And it's this two-chart process that allows us to reduce risk dramatically. It's this two-part process that's going to give you the most room to get to your targets, guys. We use two charts because they really are just a reflection of who's in charge. Quick heads up, you're not in charge. Just a little FYI, a PSA, whatever you want to call it. You're not in charge. You'll never be in charge. I want to be in charge, but I'm not, guys. The people that move the market have billions of dollars in accounts. The people like me don't. My position doesn't influence the market a bit. The market doesn't care about my position. Couldn't care less. The large crowd, guys, the people that move the market, this is your large chart. And the large crowd defines the direction. When they want it to go up, it goes up. The large crowd creates the momentum. And when they say we're going to go up fast, guys, we go up fast. And the large crowd defines the areas. They react to those areas on your large chart. You know exactly where they're going to be long before you get to them. You just have to learn how to not trade into them. When the large crowd has everything crank in their direction, full tilt boogie, I mean, they feel good and nothing's in the way, there's the small crowd. And the small crowd has more money than you, and the small crowd has more influence than you, and the small crowd is more popular at parties than you. And they can create these little shoves, these little pushes against everything that the large crowd wants. But the small crowd, despite their bad intentions, they fail 70 to 80% of the time. Whether it's by design or whether it's just because the large crowd eats them up and runs them over, 70 to 80% of the time, the small crowd isn't going to create a significant change in the market. But there is enough of a change. And you guys are going to be able to pinpoint precisely where their failure point is most likely to happen. And this is going to become your entry for the highest probability trend trade. And if they fail 70 to 80% of the time, ladies and gentlemen, you now have a trade that has the potential to win 70 to 80% of the time. You're going to take advantage of their failure. So we're going to use these three rules. We're only going to use two charts. And guys, we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. Okay to trade, guys. Give yourself two options every morning. Either my rules are met and I will enter a market no matter what my gut tells me, or my rules are not met and I will refuse to enter the market no matter what my gut tells me. Keep your gut out of the equation, guys. We're going to learn these rules. We're going to break them down individually. Guys, I'm going to show you how to study them. I'm going to show you what they mean. You're going to see it visually. You're going to hear it verbally. I'm going to beat these rules into your head. Your job is to learn the language of what identifies the rules. Your job is to be able to look at your charts and say out loud without hesitation, I have this advantage. I'll look for the next one, guys. Simulate, practice, take trades, guys. Get in there. You're going to make mistakes. Be cool making mistakes. You're brand new. It's all right. But guys, simulate. Practice these looks. Practice learning these rules. And then the best thing that you can do, And the first step to becoming a confident trader ASAP is post your charts in the room. Tell me what you're seeing, guys. And I don't need a dissertation on what's going on in your head. What I want to know is, did you see momentum? Point to it. You can write OFM. You can write a capital M. You don't have to type excessively, but let me know that you saw momentum. Let me know what you thought about that clear path. Show me your entry and show me your exit. Don't show me incomplete trades, guys, because there's a lot of opportunity and a lot of learning lessons from start to finish. Maybe it's a management lesson. Maybe it's a you could have held it lesson. Maybe it's a it would have gone further lesson. Guys, show me those trades start to finish. And the cool thing is, the more trades you show me, the more I'm going to get in tune with what your brain sees and what you see and what you do well and what you do poorly. And yeah, we all do things poorly in the beginning. It's okay. And then we just work together. It's like a private session, and we start working towards that good stuff. I'm going to simplify. I'm going to oversimplify. I'm going to tell you to ignore things that aren't important. I'm going to tell you you don't need all those damn indicators. I'm going to tell you that you don't need that extra chart, guys. I'm going to keep you so focused on advantage recognition for the first hour that I want you to believe in your heart of hearts that when they're there, you are 70 to 80% invincible when you follow this trade, which means that 20 to 30% of the time you got to be okay with a little chink in the armor, guys. We're going to simplify, and we're going to talk about the high probability trend trade. Here's the second half of getting where you want to be ASAP, guys. You have got to learn these looks. You've got to memorize these looks. You have to memorize the language associated with these looks, guys, and you've got to say this out loud every time you're taking a trade. This is where I'm at. This is what I have. This is what I'm up against. And once you get to the point to where these looks become easy, guys, it slows the market down. It doesn't feel nearly as intimidating, and you'll actually, it's almost like leading the passer if you're a quarterback. You are going to begin to see your setups before they're actually setups because you're recognizing patterns. The first tab in the spreadsheet that I give you guys every day, guys, this is a trade journal. It's all it is. Every time you simulate, all you have to do is drop the picture in here. Talk about what you saw. Win, lose, or draw, guys. It doesn't matter if you lose on simulator. Some of my greatest lessons come from my losers. Winning just makes you feel like, all right, that's cool. It feels good. It's a dopamine kick. But when you lose and you analyze, oh my gosh, you don't make those mistakes over. You start to eliminate some of those losers. So this talks about what you did and what the advantages were and whether you won or lost. And guys, there's a giant section that says feedback from class. I guess it could say feedback from Mark, but maybe I won't teach this every day. Feedback from class. What was the feedback? Was it the perfect trade? I'll tell you if it was the perfect trade, if it fit the rules completely. Did you fight something? Did you enter early? Did you exit late, guys? Put those notes in here. Mark said. And then use those pictures. Go back and study those pictures. It takes 3 to 5 minutes to look at what you did yesterday. It takes 3 to 5 minutes to read your annotations and know what you did well and what you did poorly. It takes 3 to 5 minutes to read the feedback that you got in class. And what this does for you is every morning, you are set for the day. You're looking for all these positives and you're looking to avoid the negatives, guys. And this little historical study each morning is going to prepare you for the day and accelerate the learning. On the second tab, there is how to paste those links into your charts so that you can use a hyperlink rather than having this giant screencast link. And guys, there's the how to annotate. This is how to get the best out of the best. This is how to get the greatest feedback. This is how to make your study the absolute easiest. Talk about the 3 rules every time you annotate a chart. Initially, as you're learning the software, talk about what it means to have them met. Take the time to annotate, guys. The market doesn't set up trades every 18 seconds. You have time. But the more you write on your charts as a brand new user, the more you annotate your charts as a brand new user, the further you're going to get and the quicker you're going to get there, because all we're trading is patterns. That's it. All we're trading is looks. We're not trading news releases. We're not trading gut feelings. The market couldn't care less if you have a mortgage payment due, guys. So we're giving ourselves these advantage every time we enter a trade. The third tab are the rules broken down individually. And I'm telling you, you've got to learn these individually. It's not difficult. If you stop looking for the money and you start looking for the process, you find the money quickly. Strong triggers, clear path, entry area. Commit these looks to memory. Study it. Take pictures. Weak triggers, the opposite of having an advantage. Know what it looks like. Termination conditions, the opposite of having the advantage of a clear path. Know what it looks like, guys. This is the most broken rule. I've got 79 pictures of termination conditions in here, trying to get you to focus on nothing more than the language. What makes a termination condition, guys? The language is clear. Study it, know it, learn it. Trust me on this one. The next tab is about 380, 390 pictures of you guys doing great things with the software. Having momentum, having a clear path, taking an entry in an area. Guys, pinpointing where the market is most likely to continue. I stole every one of these from Nexgen users so you could use it as a study guide. Entries for longs and shorts, because we can go both directions in the futures market. Management, the most mechanical, basic, take the fear and emotion out of your trading management plan ever. And guys, you got to get good at management the same way you got to nail these entries. More reasons to hold, more reasons to exit. And then once you can read your charts, guys, you're going to see patterns that you weren't even looking for. You're going to see patterns you didn't know existed. Once you learn the best of the best trade with the most advantages, guys, you're going to see your opportunity. The high probability trend trade is not your get rich trade. The high probability trend trade, when you understand momentum and clear path, is what allows you to see your next trade. It allows you to see that trade that's a bigger move, that's a better move, that's a faster move. So we're going to focus heavily on this high probability trend trade. For you guys that are working on this, I want you to do a little association with language and looks. Language and looks. So one of the things we're going to do is we're going to let the large chart define trend, guys. Rule number 1 says that we have to have strong trigger lines. That begins with understanding the trend. If the background is green, the market's going up, let's go up with it. If the background is red, the market's going down, let's go down with it. And guys, going with the flow makes life easy. Strong triggers in an uptrend means that your small and your large triggers are both green. They have to be in order to have strong triggers. Small triggers break above and away from the large triggers. Guys, large triggers are wide. They're not flat, they're not tiny. They are wide and they're angled in the direction of the trend. This looks like scissors that have opened up, getting ready to cut. When I have space between the small and large, when everything is wide and angled in the direction of the trend, ladies and gentlemen, the odds are favorable for the market to continue up. And when the background is red and everything's going down, if my small triggers are red and my large triggers are red, and there's this huge gap between the two, like scissors that are open, the odds are favorable for the market to continue down. Guys, odds favorable momentum. This is our battle cry. Odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum has been created by the people that establish these moves. Odds favorable momentum is what it takes to break those key Fibonacci areas. And guys, odds favorable momentum will cover a lot of the mistakes that we tend to make as new users, because it's hard to stop that freight train. When you've got strong triggers up or strong triggers down, guys, you're going to see these tails on a large chart. This is that inner working. This is that pullback on a smaller, faster chart. And you're going to be able to pinpoint precisely where these tails are most likely to form, and these will become your entries for the highest probability trend trades. But everything has to begin with strong triggers, guys. Momentum leads the way. And it looks like crude oil's putting on a little bit of a clinic. When the smalls are above the large and the large are wide, the space is there, the odds are favorable for the market to continue up. When the smalls are below, the space is there, the odds are favorable for the market to continue down. It doesn't guarantee the continuation, but those favorable triggers give me a huge advantage. Is everybody cool with that? This is one of the easiest lessons that you're ever going to get. Commit to momentum and you'll be surprised at how easy trading becomes. Commit to direction, it's even easier. Guys, scissors close, momentum gets lost. The market is cyclical. Good morning, Jeffrey. The market goes up and down, momentum is present, it's absent, guys. This is the presence of momentum, and when those small triggers work their way back inside of the large triggers, guys, this is when anything can happen up or down. This is your weakness. Strength, use that anchor word, weakness. Odds are favorable for the market to continue. Anything can happen up or down. So what you're doing right from day one is saying, if I don't have momentum, I'm not comfortable with taking a trade. Mike, in my experience, oil and ES give clearer, more defined trades. That's why I opened both of those charts to teach with, because I believe both offer opportunity, guys. And that's why we start there, because they flow, they're good. But if you're not comfortable going back and forth between two, guys, just watch one for a while. All you're doing is learning the patterns. And please believe me when I say, when you understand momentum, clear path, and entry area, you're going to find this pattern on any market. Doesn't matter. Once these are committed to memory and it doesn't take long to identify, all sorts of opportunities. So, strength leads the way. Strong triggers tell you it's time to look for rule number 2. And rule number 2 says termination conditions false. Don't trade into those areas that are likely to stop the market. Don't trade into those areas where the large crowd is likely to make decisions. Guys, the areas on your large chart that may stop the market, that may create an untradeable bounce, that may reverse it completely, are any one of these lines. And no one of these is more important than the other, guys. All they are really is just horizontal lines. Divergence highs, divergence lows. A magenta line from a high, cyan line from a low. Guys, these form when there's a loss of momentum. Divergence is just Nexgen's way of saying, hey, there's a loss of momentum right at this pivot. Divergence on its own probably isn't going to stop the market, reverse the market, change everything. But these lines become lines in the sand. And when price gets there and decisions are made at them, that's when they become powerful. The same is true with Fibonacci resistance, Fibonacci support, in these yellow 1-to-1s. These are all the areas where the large crowd is most likely to make decisions. You're going to see them long before you ever reach them. So the recipe for identifying a termination condition begins with allowing price to reach the area. And guys, this is the language that I really, that's a lot of reallys. I really want you to focus on this right here. 2 things. Price reaches the area. Price reaches Fibonacci resistance. Decisions might be made. Once price reaches resistance, you're going to let the T3 trigger lines tell you what's happening there. If your triggers are below resistance, price reaches, where are my triggers? Say it every time you hit a line. Price reach the area, where are my triggers? If they remain below resistance, resistance is a termination condition. Resistance may stop the market. Resistance may create an untradeable bounce. Resistance may reverse the market completely. And if it does, we're going to call that a strong top. Market comes down. Price reaches Fibonacci support. Guys, if price is up here and support is down here, the first part of identifying a termination condition hasn't been met, which means that if you're in a short position, that fib represents a target, not a termination condition. That's where the market is likely to go. So price reaches support. Where are my triggers? My triggers remain above support. No more trades into the area. This is an area that may stop the market, may create a bounce. And if it reverses the market completely, ladies and gentlemen, this is a strong bottom. And a strong top or a strong bottom have nothing to do with the rules for a high probability trend trade, but a strong top or a strong bottom, if it precedes it, creates a little extra advantage. It adds just a little more giddy up to anything that happens at these super impactful decisions right at key areas that were strong enough to reverse the market. So guys, this is your most basic lesson. If price reaches an area, let's start up here. If price reaches an area, Fibonacci resistance, can you give me a Y if you see that the triggers didn't break that area. This is a termination condition. It may create an untradeable bounce. It may reverse the market completely, creating a strong top. There may be a fight here, and I want you to see what happens. The market goes all the way down. Momentum breaks an area. We see that a lot. And it hits Fibonacci support. And none of my triggers break through support. And there's a giant untradeable bounce. I want you to train yourself, ladies and gentlemen. If price reaches an area and the triggers don't break, be willing to sit on your hands and do nothing. And look at this. Price hits support and bounces all the way to resistance. And then it continues all the way back down to support where the triggers don't break. And it pulls all the way back to resistance. Resistance used to be support. Resistance used to be support. Resistance used to be support. There's a lesson there. And guys, that's what happens when areas break. When your small and large triggers get below the area. So price reaches support, triggers remain above, sit on my hands, do nothing, pause, it's okay to not be in the market. If both the small and and the large triggers get below support, both the small and the large triggers get below support, guys, your path is now clear and the area is broken and support's behaving as resistance. And your path only remains clear until you reach the next area. Price reaches resistance. Look at where your triggers are. They're so far below. I have 14 bars of patience until my small and large get above resistance. Only then is resistance broken. Only then is your path clear. Only then is rule 2 met. And your path will remain clear until you reach the next area, guys. So give me a why in the room, pretty please. If you're comfortable with the idea that when price reaches and the triggers don't break, guys, sit on your hands and do nothing. This is the patience piece that we talk about. When the small and large get below, what you'll find is that the path is clear all the way to the next line. And very often, that area that broke behaves as the polar opposite. Support becomes resistance. All the way down, we hit support, sit on your hands, support becomes resistance, and the market continues down. We hit the divergence low and the triggers weren't able to break it. They tried to, they came close, but they didn't. And sure enough, that's exactly what pushes the market up. Termination reversed the market. Fibonacci resistance breaks. Everything says up. And sometimes it turns from the middle of nowhere. And when it gets below resistance, and then you start getting into this little dance, and notice that it's dissecting this key Fibonacci area. And the small triggers have broken through, but the large triggers have not. This path is not clear, ladies and gentlemen. This look right here on the most current bar. Does everybody see that we have momentum? Does everybody see that the large triggers didn't get below support? It's not clear. It can't ever be clear. Not in a million years could it be clear. That's what we call a 50-50 look, guys. This is going to be your second trade. 50-50 is a commentary, if you will, about the location of the triggers. 50-50 is not your odds of winning a trade. This is not a, well, half of them are going to win trade. Guys, 50-50 means that your small triggers have broken through and absolutely smashed through that key Fibonacci area. 50-50 means that with those small triggers through and the best look of momentum that you could ever hope for, but the large triggers are lagging, this 50-50 look lets you know that the area has the potential to break. But it's not broken because an area is only broken if both the small and the large get to the other side. So guys, this 50-50 trade, I'm going to give you a plan how to capitalize, how to enter the market with this look. But it'll never be a high probability trend trade. This will never fit into the trade that typically wins 70 to 80% of the time, because until the area is broken, the path is not clear and rule number 2 isn't met. This is going to be the majority of your trades, guys, but if you don't understand the difference between clear path and termination, you're going to fumble the ball on this one an awful lot. It still only has the potential to break. The area hasn't broken yet, guys. This area had the potential to break. Let's see if we can find. The areas are holding pretty strong. God bless the fibs. I mean, come on, termination. There we go. That one had the potential to break. This one had the potential to break. That's a perfect termination. That's a perfect termination. My goodness, look at how often these lines stop the market cold. Have any of you ever just gone back 10 days worth of data and said, it stopped it, it stopped it, it stopped it. Damn it, it stopped it. It created a bounce. Guys, if you do this, you're going to stop trading into termination conditions. If you go back and study these without taking a trade, you're going to realize that more often than not, these lines screw up your forward progress. Why on earth would you ever want to trade into them? Unless you have a plan based on hope. And guys, hope is a horrible way to make a living. So I'm going to give you a plan for the high probability trend trade. I'm going to give you a plan for that medium probability 50-50 trade. Let's keep it simple for a while, guys. And know that there will be times when your path isn't clear because the areas are stacked a bit. Know that there's going to be time when there are 3 levels of Fibonacci support, 3 points apart, and you can't seem to find a clear path. And the same will be true with resistance, guys. This is where I want you to remind yourself. When you start feeling frustrated that you're not getting a trade, when you start feeling anxious that the market is going to finish trading for eternity in 30 minutes and you're never going to find another trade, guys, I want you to simply say to yourself, 90% of my day is doing nothing. My money is worth advantages. And guys, just because there was a move in the market, it doesn't mean that it was your move. Just because the market reversed didn't mean that you needed to change direction with it. Just because there was momentum doesn't mean that you missed an opportunity. Guys, your opportunities are based on 3 advantages. The futures markets trade $220 billion an hour, guys, over $1 trillion a day. If you can be patient and wait for the best opportunity, making $400 a day puts you in a 6-figure income. $400 out of trillions. I like your odds if you wait for advantages, guys. Rule number 2, Fibonacci gives you the ability to see exactly where the large crowd, where the people that move the market are most likely to make decisions. The rules for rule number 2, or the rules for the rule, gosh, I'm struggling this morning, tell you how to identify that you should not be trading into that area. Price reaches an area, triggers didn't break, sit on your hands. Price pulled back to resistance, triggers didn't break, sit on your hands. Price went back to 1-to-1s, triggers didn't break, sit on your hands. And in the moment, right there, sit on your hands. Guys, this is 35 minutes of doing nothing. This is 35 minutes of being patient. And very often I get these pictures in the room, and I'm going to show you exactly what people drop in the room. And guys, this is the most normal question you could ever have. Someone will drop this in the room and they'll say, hey Mark, where was my entry? Has anyone ever done this? I just saw the biggest move ever. Where was my entry? How do I capitalize on this? And then I have to tell you, and it upsets some of you guys. There wasn't one. Not my money. I don't have the advantages that I need to take a trade here, not as a brand new user. And once you accept that every dollar isn't your dollar, guys, trading becomes a lot less stressful. Trading becomes much more relaxed, guys. Trading is nothing more than an accumulation of advantages that have been proven to win more than they lose when you piece them together to create a trade. That's what we're trying to establish in this first hour, guys. We're really trying to build this foundation that makes you aggressive to get into the market when the rules are met, and it makes you very passive and relaxed when they're not, because you know that your best chance of success isn't present, guys. So large chart leads the way. Large chart needs momentum. Momentum is insane. I love momentum. Momentum makes me smile like a kid in a candy shop. But momentum isn't enough. Momentum doesn't guarantee that you're going to win a trade, guys. Momentum pushes a market, but these key areas on a large chart can stop it absolutely, positively, cold in its tracks. And even with odds favorable momentum, when I hit an area, I have to pause. And guys, look at that. It did ultimately break. It had the potential, the momentum pushed it, and it pushed it down. Let's see if we can find some examples where we hit an area with odds favorable momentum and that area just doesn't break. Guys, momentum is only one piece of the puzzle. Separation of the triggers is only one piece of the puzzle. It doesn't guarantee a win. You got to make sure you're not trading into lines. You have to make sure that you're not trading into areas that may stop the market, because you need that clear path, guys. But once you have them, let's go pinpoint. Let's find some precision. Let's get into the market where the market is most likely to continue. And only when rules 1 and 2 are met will you turn your attention to your smaller, faster chart. If you look at that smaller, faster chart before you have momentum and a clear path, she's going to talk you into 1,000 trades, guys. This is the siren song. There's a lot of people that won't even look at that chart until their rules are met. If I go over there and look for a trade because my rules are met, guys, there's one time where my small chart will talk me out of a high probability trend trade. There's one pattern on a small chart that'll keep me from pulling the trigger on a high probability trend trade. And that's 3 divergences in the same price range. 3 losses of momentum in the same price range. Remember, this is a dissection of that one bar. So that one bar might say strong triggers down. It might say clear path down. But if my small chart shows me, hey, wait a minute, 3 losses of momentum, it's showing me some change that I can't see on that large chart. And this is a termination condition. 3 from a high is a termination condition, guys. And it says, hey, pump the brakes. Don't look for your entry. Let's get beyond this trouble because it may reverse the market. But if I have momentum and I have a clear path and there's nothing in my way, guys, I'm gonna incorporate some precise entry stuff here. So precise that I'm gonna use a limit order. I'm literally gonna be able to wait for the market to come back to me, and I'm gonna use that limit order at an area, fibs, midbands, and yellow 1-to-1s, and that area needs to be inside of triggers. I'm gonna buy a pullback. I'm gonna sell a pullback. And guys, what we're doing with rule number 3 is we are pinpointing precisely where the small crowd is most likely to fail. We are pinpointing precisely where the market is most likely to continue with all of that momentum and clear path. So if you say it in one breath, I'm going to use the limit order to buy or sell a pullback at an area inside of favorable large triggers. Inside of triggers, best of the best, inside of what we call favorable large triggers. Large triggers. Love them. Price returns to large triggers, guys. Write that down on a piece of paper. Price returns to large triggers. Price returns to large triggers on a large chart. Price returns to large triggers on a small chart. Your entry chart has both time frames large triggers. It has large and synthetic. Synthetic are the large from the large chart. These trigger lines define where the market is most likely to continue on that pullback, where the market is most likely to return, guys. This is a correction point. The market goes up, breaks away, and it corrects to large triggers more often than not. We're going to up that. Not only will we be able to identify where the market is likely to correct, we're going to use fibs, midbands, and yellow 1-to-1s inside of that correction point to define precisely where the market is most likely to continue in the direction of the trend, to define precisely where the small crowd is most likely to fail. That's how we're going to define our entry. So what I want you guys to do when it's time to look for an entry, I want you to look at both large and synthetic triggers. And I want you to say to yourself, price may return to the large, price may return to the synthetic. I'll never know which one it's going to be because I can't predict the future. If I could, I wouldn't be in this class. I would have already won the lottery. And then I want you to say, even though I've defined the correction point, I need something solid for the market to bounce off of. I need a fib, a midband, a yellow 1-to-1 in there. And the areas inside of favorable large triggers are the areas most likely to create the bounce, most likely to produce continuation, most likely to be the point where the small crowd fails. So you're going to use that idea to create your window of opportunity. If the large chart tells you that you're in an uptrend, you're going to look for momentum. And if the momentum is present, you're going to make sure that there's no termination conditions. And if no termination conditions are there, you are going to wait for the small crowd to fight. Your job is to wait for a reversal bar on the smaller, faster chart. The reversal bar is not your entry. The reversal bar is about the worst entry you could ever take because now you're on the wrong side of your momentum indicator, guys. This loss of momentum is precisely what we need to get back to those triggers because the trigger lines are where the market is likely to retrace. So once the reversal bar prints, you're going to identify large and synthetic. In a perfect world, they're one on top of the other, two snakes riding piggyback, wide, angled in the direction of the trend. But again, you have to remind yourself, my entry does not come from those trigger lines. Rather, I want something to create a bounce. Fibs, mid-bands, yellow 1-to-1s. So you're going to create a window of opportunity. The woo for all you Ric Flair fans. Your window of opportunity in a long trade will extend from the highest point of support, closest to the reversal bar, to the lowest point of support, closest or furthest from the reversal bar, guys. Areas of support inside of triggers may be fibs, mid-bands, or yellow 1-to-1s. Learn the language. This blue box represents where the small crowd is most likely to fail. It is not a one-tick decision, guys. There's some room there. Anything below the correction point, anything below the triggers is out of the equation. Anything below those triggers, your advantage is gone. So if I have a fib outside of favorable large triggers, this is not part of my window of opportunity, guys. If I have some dots above the triggers, let it give yourself the highest chance of success in the beginning, guys. Areas inside. Write that on every entry you take. Did I take an entry at the area inside of triggers? That's the best of the best. And because of all the momentum in the clear path on the large chart, your entry goes a couple ticks above. A couple ticks above that highest point of support because I will not trip over a couple pennies and try and save a couple dollars and hope that the market goes to the lower area, guys. This is what you're defining for 20 days. But Mark, there was a divergence. That's a loss of momentum. Doesn't that kill the trade? Absolutely not. Momentum is defined on the large chart through strong trigger lines. But Mark, the small triggers turned against the trade. Doesn't that kill the trade? Absolutely not. Momentum is defined on the large chart. Guys, you've got to accept that the large chart leads the way or you're going to talk yourself out of the perfect trade. In a downtrend, with momentum, with a clear path, my job is to wait for the reversal bar, to wait for the small crowd to fight, to wait for that loss of momentum that I need to push me back to my entry. This reversal bar signals the beginning of the pullback and it is not the entry for the highest probability trend trade. Once I get the reversal bar, I'm going to identify my triggers, large and synthetic. This is where price may return. But I know that triggers isn't enough. I need to identify my areas inside of favorable large triggers. It can be fibs, mid-bands, or yellow 1-to-1s. In this case, the only one that I have is a mid-band. Can you new users guess where the market is most likely to continue with the downtrend? Can you guys identify where the small crowd is most likely to fail? Of course you can, because you know the language. At the area inside of favorable large triggers, your job is to activate a limit order 2 ticks below it and hope the small crowd has it in them to get to your entry. Any line, fibs, mid-bands, or yellow 1-to-1s, above these triggers in a short trade is beyond where the market should continue. It's beyond where the market should bounce. Your advantage and your edge is gone. If you give me 20 days of hard focus, 20 days of 10 questions a day, making sure you have it, you're going to be able to pinpoint precisely where the market is most likely to continue when the advantages are there. And your ability to do that is going to let you know exactly where the market should not go. This is your first stop placement, 4 to 5 ticks above the triggers. If you are accustomed to putting your stops 5 to 6 points above or below the triggers, you're just wasting capital. You're just giving it away. Your edge is so far gone. A lot of you have ATM strategies. Thank you, Rob, for this. A lot of you have ATM strategies that say, hey, my initial stop is 12 ticks. Guys, your ATM strategy that says 12 tick stop is not your stop. That gives you reaction time to put your stop where the market should not go. And your initial stop is going to get hit. Your initial stop will get hit, guys. And making it bigger only assures you a bigger loss if this is part of that 20 to 30%. The cool thing is, with all of those advantages, you're more likely to get a reversal bar in the direction of the trade. You're more likely to get what we call a confirmation bar. This confirmation bar says, hey, now we're going down with momentum. Now we're going down with a clear path. We just bounced off the area inside of favorable large triggers. Reduce your risk. 2 ticks above, 2 ticks below. And guys, it's not uncommon or unusual to see you guys pull off these sniper entries. Get a reversal bar. Minimize your risk to 30 or 40 bucks a contract. And then the darn small crowd pushes it down and hits your stop. And the market just drops or rises like it was getting paid to do it. And you're thinking to yourself, wow, I only gave up $30, $40 a contract. I'm so glad I didn't leave it down there at 12, at 150 per contract. And guys, I'm telling you, pinpointing your entry gives you the ability to understand where the market should not go. And once you understand where the market should not go, you're going to be able to minimize risk on everything that you do. So you've got to learn these patterns. This is the last picture that I'm giving you. We talked about the tails on the large chart. When the rules are met, the tails on the large chart. And I want to take a picture again. It's Friday, guys, and we're going to take a lot of pictures. When the trend is up, let's do some colorful ones here. When the trend is up, when the momentum is up, when the path is clear, when all those advantages are in place on your large chart, guys, the market is going to be right here. All the way up here when you make the decision that it's time to enter a trade, guys. And I'm not going to lie, you're going to be about 8 to 10 ticks sometimes from one of those key areas that could stop the market. I want you guys to realize that this pink line is a target. That pink line is not a termination condition yet because price has not reached it. Does that make sense, everybody? If price does not reach the area, it's just a line in the distance. Right here, you're going to make the decision. Somewhere in here, it's time to take a trade. And you're going to wait for the reversal bar, and you're going to say, man, I've only got 8 ticks. That's not a lot of money. But your reversal bar gets you in all the way down at the fib. All the way down at the fib. Which suddenly your 8 ticks turns into 32. Your 80 bucks turns into 320. Guys, this is why the high probability trend trade is top first. Because it focuses on advantages. It gives you room to your profit targets. And because you wait for the pullback to the area inside of favorable large triggers, it gives you the least amount of risk. And it gives you the highest profitability. Because you have the most room back to your targets, guys. So if you go back on a large chart, and you circle these tails, whether it's high probability, whether it's potential to break, I'm going to circle a tail with odds favorable momentum. This one had the potential to break. I'm going to circle this tail. This one had the potential to break. We're going to see what it looks like on a smaller, faster chart inside of that one bar. So I'm going to scroll back. And the top of this tail is the peak of the pullback. And that pullback went right to a mid-band, and it was before the second correction point. And it's not inside of triggers, guys. This isn't the perfect entry look, but you could use that idea of a confirmation bar when the entry isn't perfect and say with all of these advantages, if they go in the direction of the trade, I'll put my risk above it and ride that wave of momentum right to the next key area. And that's kind of where you're going to head with a little bit of practice. This one pulls right back to the area, right inside of the triggers. And continues to push down until 1, 2, 3 divergences in the same price range. Says, hey, let's jump ship. Guys, your job is to learn these looks right now. Is to just recognize these patterns. Make them easy. So I told you I'm going to give you everything that you need to be successful, guys. That's my commitment. My commitment is to give you every tool that you need to be able to use this software. So Tracy, it's not the bar that you're struggling with then. What you're struggling with is remembering that the large chart leads the way, that the large chart defines direction, momentum, and areas, that rules 1 and 2 happen on the large chart. On the small chart, it's not an entry bar. On the small chart, it's a pullback to an area inside of favorable large triggers. Tracy, you're literally waiting for the market to come back to you. That's where entries happen on the smaller, faster chart. Now, if you're waiting for a confirmation bar, then you have to wait for this reversal bar, this up bar on the smaller, faster chart. But if everything's perfect, you should be getting in at the areas inside of favorable large triggers. That's going to reduce your risk. That's going to give you the biggest room to get back to your targets. Right on. So remember that entries happen on the small chart, and when it's perfect, when it's strong triggers, when it's clear path, when it's areas inside of favorable large triggers, I don't need a confirmation bar, Tracy. I don't want a confirmation bar. I want to get in at the area where it's most likely to bounce. If the entry isn't perfect, if my triggers are split, not favorable, if it could go from the mid band or it could go from these 1-to-1s, and I'm not sure which it's going to be, but I know that my stop has to be up here initially, this is where waiting for the confirmation bar pays huge dividends. Does that make sense? If it's perfect, we're at the areas inside of favorable large triggers. Guys, if it's not perfect, force the market to go in the direction of your trade. And here's the cool thing. If you never get a reversal bar, if you said, I'll take it from this area from the wrong side of triggers because all of this says down, and you never get a reversal bar, guys, you don't get stopped out. You don't take a losing trade. There's a little tail to the upside. And it pulled right back to support right at the top of those triggers. No, where did you just made that up, Tracy? You just made that up. A confirmation bar is 1 bar. A confirmation bar confirms that the market is moving in the direction of the trade. When this bar prints, if that's my reason for entering, I hit sell now. It has to print, otherwise it's not a reversal bar. Otherwise it's not a confirmation bar. And let me show you what I mean. Let me find it. Here we go. If you were waiting for a confirmation bar here, that one went up, but it didn't confirm. That's your first confirmation. What do you mean the small chart doesn't have an area? The small chart has a mid-band right here, Cheetah. It has a mid-band, right? So let's go through the logic of entry with this look right here. When the large chart has the rules met, this is what you have to say every time. Here's my reversal bar that says, let's look for the process. Okay, just listen to me, Cheetah. And we're going to answer it perfect for you. Reversal bar starts the process. So, Tracy, I'll show you something in just a second, how you can get it right on the reversal bar. Give me 1 second and I got you. But let's make sure we know why we're waiting for the reversal bar. So, Cheetah, when the reversal bar prints, price may return to these large triggers. Price may return to these synthetic triggers. I'll never know which one it's going to be. Does that make sense, everybody? Are we good? Cool. Price may, it might, it could, not guaranteed. It may bounce off of this mid-band on its way to the synthetic triggers. It may bounce off of this fib on the way to the triggers. It may wait until it hits 1-to-1s inside of the triggers. But the one thing that I know, Cheetah, without question, is that my initial stop needs to be 4 or 5 ticks above the trigger lines. So what I'm doing is I'm saying if I just arbitrarily jump in at the mid band, I've got $200 worth of risk. If I arbitrarily jump in at the fib, I've got $180 worth of risk. If I arbitrarily, or if I get in at the only line inside of triggers, I do have about 9 ticks worth of risk, $90 worth of risk. But the reality is that this chart is screaming to the downside. It is absolutely fireballing it to the downside. So my entry logic says price may return to either one of these triggers. Are you with me? Let's write it out. Price may return to either trigger. I'll never know which. And this is what you got to understand. I'll never know which. And then I have to say, price could bounce off an area above the lowest line of the triggers and below the highest line. In any one of these areas, cheetahs could create a bounce to the downside. Does that make sense? Any one of them could create a bounce to the downside. So since I don't know which one it's going to be, since the gap is huge, since my risk is astronomical, and I want you to say out loud, my entry isn't favorable large triggers. There is a lot of risk. My triggers are split. This is not perfect. I'll force the market to give me a down bar, and I will enter on that, here we go, on the printing of that bar, the close, because I can put my stop 2 ticks above it. Does that make sense, guys? Because the entry isn't perfect, I can insist on a confirmation bar. And because I have a confirmation bar, my stop isn't all the way up here. My stop is 2 ticks above it. Here's the kicker though, Cheetah, Tracy, everybody. It doesn't mean that the small crowd won't push up to the next area. It doesn't mean that the small crowd won't push beyond everything. But what it means that instead of taking a stop out all the way up here, I'm taking a tiny loss. And if I need to go twice, I go twice. Cheetah, does that make sense? Thank you for saying that in the room, because I think these are some of the things that when I teach this class so much, I start to take them for granted. And then I'm gonna talk about what Joel just said. So how do I get it? How do I get that entry? And I'm gonna drop this in the room as well, guys. There was a time where I was going through these little funding blog things, and I'm gonna give you guys this. So sometimes in your trading, you will feel compelled. I just dropped this in the room to wait for a confirmation bar to enter the trade. Timing the reversal bar, especially in a fast-moving market, can be a daunting task. There's that English Lit degree coming in. Using buy or sell stop orders allow you to have an order waiting right at the reversal bar marker on your small chart. So to activate an order for a sell, guys, you're going to click below price, and you're going to put a sell stop right on the reversal bar marker, the opposite for a long. And what it's going to look like, and let me make this bigger, is you're saying with all of the rules met, I need that up bar. So I'm going to put a buy stop. And that means that if price goes all the way to that reversal bar, meaning the reversal bar prints, I'll enter on that trade. And if I need a reversal bar down, I can put my sell stop below it. So I dropped that in the room. So let's do a hypothetical over here. And guys, I would never go long here because everything says down. But I could right click above price and put a buy stop order. And if this gives me a reversal bar up right here, it's going to put me into a long position. And it slipped me a couple ticks. But that happened so fast, that's still faster than my brain will ever be. Does that make sense? And if I needed a reversal bar for a short below price, I could do my sell stop and I can put it right on that reversal bar marker. And if I get a reversal bar right here off of areas inside of triggers with momentum, well then it's going to put me into a short trade. Does that make sense? Does that help a little bit? So guys, you can practice these sell stops. You can practice these buy stops. Let's see if it does it. I'm saying, oh, it's not perfect. This isn't my best trade. I don't even know. I'm going to force it to go in the direction before I enter. And I'm not saying that that's the right thing to do here, but what I'm saying is that if that's your rule for entry, this is kind of a way to keep you from having to have that reaction time. And the cool thing is if it never gives you that reversal bar, well, then you're never in the trade. You don't have to hope. And a lot of times you'll say, all I need is a reversal bar up to enter the market, and it'll get so close, but it won't give you that reversal bar. And it keeps you from jumping in and hoping that it happens, and it forces you to wait for it to happen. Does that make, I hope that's helpful for you guys. I love Simulator, because Simulator we can practice all these things, and we don't have to worry about it one way or the other. So guys, your job is to learn some looks. Your job is to get good at momentum, at clear path, and an entry. And even more importantly, get good at knowing what it looks like when the rules aren't met. This is how you're going to get there. You can choose to do it. You can choose not to do it. That's totally up to you guys. You're all my horses. I'm bringing you to water. But if you took an hour this weekend and you took 25 pictures of strong triggers, 25 pictures of weak triggers, guys, you would probably never trade without the advantage of momentum because you would know 100% what it looks like. If you took 25 pictures of a clear path and 25 pictures of termination conditions, you would never get caught out trading into these termination conditions because you would know exactly what they look like. The same is true with entries. If you define your entry and use the language area inside of favorable large triggers, you're less likely to jump in early or get in late because you're going to know exactly what it looks like. Guys, getting to where you want to be has very little to do with the trades that you take, with the hope that you create for yourself. Take pictures of strong triggers and start filling up this spreadsheet, guys. Take pictures of clear paths. Start filling up this spreadsheet. But don't just take the pictures. When you take a picture of an advantage, I want you to write out, why is it an advantage? Red background means that I'm in a downtrend. Smalls below large, both wide, in direction, space between. This is strong triggers. This is odds favorable momentum. This is rule number 1 met. Does that make sense to everybody? Now we're not only taking the look, but now you have definitive words to rattle around in your brain to make sure that you associate this 32 flavors of kick-assery that goes with strong trades, with strong triggers. And then you've got to do the same, guys. Watch this, clear path. This is where everybody struggles. Use the language, learn the language, say the words, associate it with the look, draw some arrows. When both the small and large triggers are below support, it's now broken. The path is clear until price reaches the next area. Then the process begins again. Guys, you're never going to accidentally trade into termination conditions if you're using the language. You're never going to say, man, price reached an area, my triggers are above. Well, because it bounced up, I must have room to my target. No, it's a termination condition. Don't trade into it. Don't trade into it. And guys, sometimes they break, sometimes they don't. You'll never know which one it's going to be. But if you learn these very simple looks, what it means to have it, what it means when it's gone, guys, it's going to eliminate so many mistakes. And it's going to eliminate an awful lot of opinions. And as you take these pictures, and guys, I know it's overwhelming. That's 140 pictures, Mark. I can't take 140 pictures over a weekend. Oh my gosh, that would take forever. Guys, I take about 80 pictures a day. I still take about probably between 50 and 80 pictures a day. Every trade I take 6 or 7 pictures. Make sure that your pictures are correct. Make sure that your annotations are correct, guys. A strong top or bottom is a termination that reverses the market. There's your picture. Momentum is always momentum. It looks the same in an uptrend. There's no variation. The same in a downtrend. There's no variation. Weak triggers will always be weak triggers. Weak triggers will never be, well, I think it's a strong trend, so I'm going to call it momentum. Weak triggers will never be, this is odds favorable because they're all red. Guys, you've got to learn the look and learn the language. A termination will always be a termination condition no matter what your gut tells you. The potential to break will never be a clear path because it's only potential. And guys, a clear path is only defined when the small triggers and the large triggers break the area. You've got to commit these looks and words to memory. Areas will always be inside of favorable large triggers. Areas beyond the triggers are not a part of the equation. This area has nothing to do with anything. Lines inside of triggers are where trades originate. Lines inside of triggers are where trades originate, guys. This is the most basic concept for the brand new user. This is what you're focused on for 20 days. And if you really keep it simple for 20 days, by the end of that 20 days, you're going to start to see things outside of the high probability trend trade. So I'm giving you a checklist. All the pictures we just took, guys, here's your checklist. Print it out, put it on your desktop. One of the best things I think new users can do is every time you take a trade, write this stuff on your chart. Every time you take a trade, talk about where the market is coming from. Was it a strong top or bottom? Talk about whether or not you had odds favorable momentum. Point it out. Use the words. Talk about whether or not you had a termination condition. Use the language. This is a termination condition. Price reached the area. My triggers are below. Holy shit, I don't have an advantage. Pardon my French. Every entry you take, guys, if you use this phrase, areas inside of favorable large triggers, you're going to nail your entries, guys. You're going to nail your entries. And I want to see something. Area inside of favorable large triggers. Hold on. Area inside of favorable large triggers. I'm committing this look to memory. I'm committing this look right here to memory. I know exactly where my trade has to come from. Any entry that I take that isn't from an area inside of triggers, guys, I'm hoping that the market goes down right here. Let me show you a pretty common thing. Does everybody see how the large chart says giddy up? Your small chart's an entry chart. Half of this room is going to enter on this bar because they were afraid it was going without them. And they're going to get stopped out right about here because it's 12 ticks and they don't want to put that much risk on it. A third of the room is going to get into the market right here. And they're going to get stopped out before the actual entry comes because they don't want to leave that much risk on it. You guys that did the work and studied the pattern are going to get in 2 ticks below right here. And when that reversal bar prints, you're going to say, man, I've got 4 ticks of risk. From here, I've got 12 to 15. From here, I've probably got 20. And the one thing I did by not waiting is I shortened the distance to my target. Guys, you've got to commit to this look. Great entries create very, very, very manageable trades. So commit them to memory. Once you know what it looks like, guys, you're more inclined to take it. And then that brings us to the KISS plan. This is my pride and joy, guys. This is my baby. I created the KISS plan because a gentleman called me one day, and he was mad. He wasn't happy. And he said, Mark, man, I feel like I can read the indicators, but I can't seem to find winning trades. And I asked him, I said, well, what trades are you looking for? And he goes, well, I'm looking for trend trades, high probability, and I'm looking for trend trades, medium probability, and I'm looking for that 50-50 trade that you talk about, and I'm looking for those HVA trades that I saw in the manual, and I'm also looking for this counter trend trade, and I'm trying to use the gap theory for a trade, and then I'm taking a trade based on 2 divergences, and I fight everything, and man, Mark, I just can't seem to win. And I replied, wow, that's a lot. And guys, that is a lot, isn't it? Just saying that should have made some of you uncomfortable. So I said, Cheetah, let's keep it really basic. Do me a favor. Give me a week. Give me 7 trading days, 5 trading days, where all you look for is a trade that optimizes your chances of success with this software. Let's focus on the high probability trend trade. Let's be willing to be bored. Let's be willing to be out of the market. Let's be willing to not be in every move. Let's be willing to get paid. And let's just see what happens. So we created this KISS plan together. And I said, this is your focus for the next week. And I want you to tell me And I want you to tell me how it works out, guys. So I'm giving you the same plan that we created for this gentleman. I'm going to tell you another story about the KISS plan too. Back to basics. Cheetah, welcome to the group of every one of us that has said that and found success. Guys, this KISS plan is a stepping stone in your learning journey. We're building a foundation. This is your first trade. This is not the only trade. But this is the trade that's designed to optimize your chances of success as a new user. And like Ron says, this isn't your get rich trade, guys. This is the one that's going to open your eyes to your get rich trade. Through study, simulation, class feedback, continuous practice, guys, you will create a plan based on your ability to read the indicators. But as you're learning to read your indicators, as you're learning to control your emotions, as you're learning to trust advantages, guys, it makes sense to stay focused, to keep it in there. Don't give yourself too much to think about. Your simple plan for consistency. Don't fight the large chart. Guys, if you are fighting the momentum on the large chart, where's my large chart? If you're trying to go up when this says down, you're more likely to get run over. If you're trying to go, let's open this up real quick. If you're trying to go short when the line says no, you're most likely to get run over. If you're trying to go long when the line says no, you're most likely going to get run over more often than not. So your plan for consistency is never fight the large chart. Don't do it. And then define your entry. And I'm telling you, once you can define your entry, guys, for this high probability trend trade, it opens doors. Once you understand momentum and strong triggers, and once you can pinpoint your entry, then you have to manage. And guys, if you're looking for 7 trades and you don't know these rules like the back of your hand, you're going to create this bastard love child of rules that puts you in all the wrong trades. Once you enter the trade, guys, this is where most of you start to get scared. Once you're in at the best of the best spot, guys, once you're in at the area where the market is most likely to continue, everybody puckers because now you have something to lose. Has anyone else ever felt that way? I have momentum, I have a clear path, I took the best of the best entry, and your next thought is, holy shit, I hope I don't lose. Instead of your next thought being, this is a pattern that wins 70 to 80% of the time typically. This is a pattern that wins more than it loses. This is a pattern that has every advantage. This is a pattern that has been proven and validated and verified, and I've studied it. This is a pattern I trust to take me to my targets more often than it doesn't. Guys, that is the language that you have to use in your brain when you take this great entry. And your initial stop is 4 to 5 ticks below those triggers. And guys, I want you to be arrogant and defiant. And I want you to say, these guys have to come get me. I refuse to exit this trade early. I refuse to move my stop. I refuse to jump out because I'm fearful. If you jump out because you're fearful, you need to go back and study the pattern more. And you're either going to get stopped out. And guys, this will happen 20 to 30% of the time. 7 or 8 out of every 10 high probability trend trades you take, you're going to take a loser, and you never, ever, ever get to pick which ones win and lose, and you'll never know which ones are going to win or lose. So you're either going to get stopped out, and that's a totally normal part of a positive equity curve, or you're going to get a reversal bar in the direction of the trade, a confirmation bar in the direction of your trade. This is your first stop movement. Your first stop movement will be 2 ticks below the reversal bar in the direction of your trade, or 2 ticks above the reversal bar in the direction of your trade. And at this point, you've minimized risk. You have less to lose and everything to win. And you're either going to get stopped out for a smaller loser, totally cool, it happens, or it's going to hit your first target. Guys, the KISS plan is designed to put you into the market where it's most likely to continue. The KISS plan is designed to help you learn how to minimize your risk. The KISS plan is designed to get you paid ASAFP. Your first target is $100 away from your entry, guys. And this $100 dries up sweaty palms. This $100 creates confidence and trust in great entries. This $100 goes into your account, and you're going to move your stop to break even. So not only did you just pick up a $100 bill off the sidewalk, it's in your wallet. Nobody can take it from you. You have nothing to lose with the break even stop. Guys, this is not the best stop, but it teaches you to trust the large chart. It teaches you to embrace momentum and clear path and understand that it's more likely to go up than down. So your second target, because I know right now you're having a heart attack and you don't want to give anything back, is only $200 away from your entry. And guys, if you take the perfect entry with the pragmatic management, and this goes all the way to the end, hits that second target, that's a $300 trade. Now this is what you have to ask yourself. Why do I feel like I have to be in every move? Because if I'm not in the market, I'm not making money, right? We all feel that way. I can't make money if I'm not in the market. You guys want to know a secret? It doesn't cost anything to not be in the market, but it typically costs a lot to break your rules. And one of the things that separates confident, successful traders from nervous, emotional traders is the ability to do nothing when there's nothing to do. The ability to stay out of the market when the rules aren't met. Guys, one high probability trend trade a day for every trading day of the year is $75,000 positive. Add one of the break evens to it and you're in six figures, guys. This is the most remedial approach to using the software. The high probability trend trade prints up and comes to be maybe 3 to 4 times a day. That's why we have the 50-50 trade as well, guys. That's why I gave you the plan for the 50-50 trade as well, because the 50-50 trade is that area with the potential to break. And I've put this right in the KISS plan. Because if you don't understand a strong top or bottom from your lessons in the high probability trend trade, you're going to screw up the 50-50 trade. This is the most lost trade because everyone treats it like a trend trade. If you don't have momentum on both charts, you're more likely to lose because the path already isn't clear. Why would you sacrifice momentum? If you have divergence, you're more likely to lose. So much so that it tells you a second time to make sure you are listening. And guys, you're going to enter at the area. You're going to define your risk. You're going to know where the market is most likely to continue. But it's only potential. The rules are different for the 50-50 trade on entry, and the rules are different for the 50-50 on exit, guys. If divergence prints, you have to get the hell out of the trade. That's what kills them more often than not. Your first target is your first trouble spot, or $100, whichever comes first, which means that your first target might be $70 in the distance. Stop trying to hold through trouble on a maybe trade. And you're taking quick profits, guys, because it's not a home run. So I'm going to tell you another story about the KISS plan because it's Friday and I feel like flapping my gums a little bit. I had a gentleman call me and he said, respectfully, Mark Novak, you and Nexgen are full of shit. Pardon my French. Sorry, YouTubers. You guys are full of crap. These trades don't happen. These trades never happen. I can't catch any of these trades. All I'm getting is losers. And guys, let me tell you something. This Yahoo didn't have a trading plan. This Yahoo never took pictures. This gentleman never participated in class. And what he tried to do was watch videos and create his own reality about what it meant to have momentum. And he created his own reality about whether or not he had a clear path. And he created his own reality about his entry areas. And he said it, and it was respectful. But he goes, Mark, you're 100% full of shit, and this is snake oil. And I said, all right, do me a favor. Let's work together in class for a minute. Show me your trades, and let's make sure that you understand the basic concepts. And guys, one of the things that he wasn't doing right is he couldn't define momentum. He couldn't go back to that very basic lesson, and he didn't do any study, and he didn't have any idea that the only way to have momentum is to have a separation between the small and the large. So we fixed that for him through feedback, through seeing what he's doing and working forward. And then he had absolutely no concept of what a termination condition was. And he kept saying that the potential was a clear path. He kept saying if the price bars are above it, it's a clear path. So we fixed that misconception. And now he was developing the solid foundation through feedback, through simulation, through study. And then we looked at his entries. And one of the biggest things that he did over and over is he entered from the wrong side of the triggers. Over and over. He would get in where the market shouldn't go, where he was in the run-over zone. Over and over. He would miss trades because he'd have entries on the wrong side of triggers because he didn't want to risk. So guys, what we did is we fixed every broken thought that he had because he showed me what he was thinking on a chart. He wrote on the chart what he was thinking, and we fixed his chart read. And then I said to him, now that we've corrected this, now that you've seen this, now that you understand the concepts, I want you to do me a favor. I want you to give me 5 days on the KISS plan, and I want you to follow it to the letter. I don't want you to create opinion. I don't want you to worry about missing out. I want you to say to yourself, my job is to follow this to the letter. And he did. And on the 7th day, he called me. On the 7th day, he called me and he said, you know what, Mark? I apologize for suggesting that you and Nexgen were full of shit. He said, because once I focused on following the rules, I didn't find the losers anymore. I found the winners. And he goes, Mark, do you know what my win percentage was last week? And I said, tell me. I'm excited to hear. He said, I won 87% of my trades last week. 87% of his trades is what he won following the KISS plan. Your results may vary, but you know what the biggest killer was for him, besides the entries, is he kept taking these 50-50 trades with losses of momentum and not from a good top or bottom. And guys, once he focused on the best of the best, and if this sermon feels like it's coming right at you, then this is for you. Once you focus on the best of the best, guys, you're going to find your way to make money. And he adjusted the 50-50. And then Cheetah, on the favorable large triggers, he abandoned that. And he went with confirmation bars on the split triggers. But what he did is he kept it as simple and basic as he possibly could. And he found success. And that success brought confidence. And guys, this is my hope and prayer for each of you in the room. That you allow it to be simple. That you let it be focused. That you realize that the market is gonna keep trading, guys. There will be more trades. Keep it basic, focused, and just please, you don't have to, but please, post in this room and get feedback. You need to know what you're doing right or wrong. You need to know if your chart read is correct. Because once you do, everything falls into place. And this is a good one too. Don't take a trade because you see someone else take it, guys. It's not your trade. Take a trade when your indicators demand that you take it, when your rules are met. High probability trend trade will teach you to take other rules. So in the beginning, it's all these blanket rules keeping you out of the market, right? And that's so that you know when it's cool to make those exceptions. So I promised you everything that you would need, guys. We learned the rules. You can simulate. You'll get feedback every day. I gave you spreadsheets. I gave you study tools. I gave you the exact looks. I told you how to study them. Now it's up to you for repetition. Now it's up to you to make the decision on whether or not you want to be right or you want to be successful. Whether you need to have the big balls getting into the market first, or if you want to wait for the large crowd to establish your advantages, guys. That's up to you. Or big ovaries, excuse me. I don't want to keep it just for the dudes. And guys, there's one more thing. I got you, Cindy. Your ovarian fortitude is amazing. So guys, the other thing that you can do is you can use market replay. Mark can't give me experience. Guys, market replay can double everything you do. If you trade today and then you go back and retrade and fix your mistakes and correct your wrongs and manage more appropriately, you're going to get to where you want to be faster. Hey, Mike, have a great weekend, man. Have a great weekend. I appreciate you being in here and all the time that you spend posting. Use market replay, guys. It's going to help get you to where you want to be. And then most importantly, guys, use me. Use me. I've been reading indicators for 5 years. I've been teaching people to trade and read these indicators and see these advantages for 5 years. I have zero doubts in my ability to help you get to where you want to be if you promise to do your part. Take your trades, post them in the room. Take your spreadsheet, fill it up over and over, every picture. Take 20 pictures a day, guys. And we're all going to get to where we want to be. So, that's my first half of class. I made it long today because I really wanted to drive home the point that success comes from repetition. Success comes from the process, not the desire. Focus on the process that creates money, and the money tends to follow, guys. So I gave you everything that you needed in a zip file. I gave you every one of those printouts that I shared. I gave you my PowerPoint that has all the pictures. And Cheetah, in the back end of that PowerPoint, and Tracy, it's actually got using the split triggers waiting for confirmation as well. We just did it in the live market today. You've got everything. You've got the definition of areas. You've got the trigger lines. You've got how to study. You've got your path to becoming successful. You know who's in charge. Let's just go ahead and get the repetition, guys. So when I come back, we're going to look at what you've done. We're going to look at your trades. We're going to talk about 3 advantages. No matter what kind of trade it was, we're going to talk about the 3 advantages because this is an education room, guys. And even if it's not your trade, there's probably something to learn. So what we're going to do is I'm going to come back and I'm going to do this. You're going to tell me what you saw. I know what you saw, right? And I probably even knew the scary stuff that got you out. But this is for you so that you can go back and study it, guys. The more you annotate, the clearer it becomes. Don't play trade police. When we come back and we start looking at the charts, when we start looking at the indicators, when we start looking at people's trades, don't play trade police because everybody's got a different plan. Focus on the advantages that I talk about. If you have a question about it, please ask. It's okay. There's some amazing stuff that gets printed in this room that is so far from high probability trend trade, it'll make your head spin, but it is so related to amazing chart reads. You'll be like, holy crap, I can't wait till I get to that point. But if you're not there yet, don't try to put yourself in that spot. I'll be back in 5 minutes, guys. My mouth is dry. I'll see you in just a minute. All right, y'all. Second half of class here. So Z Robot, I haven't looked at your chart yet, but you put big question marks. Super clean, high probability trend trade. Did it have momentum? Did it have a clear path? Did it have an entry at an area inside of triggers? Guys, my goal for you, there you go. So my goal for you is that you never put a question mark on there, but you say, hey, Mark, this is a high probability trend trade. I know it is. Here's the rules being met. So we'll catch it, but I'm going to go up to the very top of the room, and I'm going to start looking at the pictures that you guys have posted, and we're going to see what's going on in the wonderful world of you. A little bit of chit chat in the morning. Joel got us going at 10 o'clock last night. I like to make sure that I try and catch yesterday's too. Joel says, check it out, Mark. I still have momentum. It's not quite weak, but it's not quite strong. We're right at that tail end, but that's a good look. Triggers have gotten below. Path is clear. Had a clear path on the chart. And Joel says the entry was not inside of favorable large triggers. But it's right at resistance with all the triggers below. And Joel, I see that you got in on the way down, and you got out of trouble, and you got out of trouble, and you did a great job. Making money when the rules aren't met. Joel, this is one of those times, and the only thing that I could say about this is this would be one of those times where a confirmation bar gives you plenty of room to make money. A confirmation bar gives you plenty of room. And man, that fib came in right on the update. So nice trade, Joel. I like the way you did it. Everything says down. The momentum is strong. There's room to the fib, and Ron gets paid. Guys, the most consistent person in the room. The same trade every time. Momentum and path. Momentum and path. Momentum and path. Momentum and path. I love it. Momentum and path. Say it out loud. Say it in your sleep. Momentum and path. My wife walks in and she's like, oh, strong triggers, huh? Cool. Because she's heard me say it so many times. Guys, repetition is the key to recognition. All right, Rob, I love this picture, man, because this opens doors for great lessons. And she's in an interview right now, so you guys throw that juju out there. She's in Austin interviewing right now as we speak for her dream job. Remedial question. What is the significance of this fib? Strong bottom. What does that indicate? Man, Rob, these are the questions, right? Because the lesson was, hey, check it out. Price didn't reach that fib. So that fib's not a termination condition. That fib is just a blue line off in the distance, the same way this red fib is just a line off in the distance. Until price reaches it, it's just a fib. If I were in a short position, it would be a target, but there is zero significance for that fib yet. 3 divergences in the same price range made it so that I didn't try to reach that fib because that's a termination condition. And then as the market pushes up, the larger down, but the smaller up, so that's not momentum yet. And if I hit a mid-band and the large triggers are a full bar away, well, that's a termination. And this is where there's nothing to do either direction. And that was the conversation that we have, guys. Torn between two levers. I can't go short. I don't have rules met. I can't go long. I don't have rules met. But damn it, Mark, I've been waiting for an hour and a half and they haven't paid me. But the thing is, you didn't lose this short trade, right? You didn't lose trying to go long too soon. You didn't lose this short trade. You didn't get stopped out of not even a long here. And guys, sometimes there's just nothing to do. And Rob, I loved your comment. The blue collar guy in me thinks I need to be busy. And Ron said, change your shirt. I love that. Change your shirt, guys. We are professional waiters. Professional waiters. And Rob, these are the pictures and the conversations that I think help. And then you posted, so what defines a clear path? I see strong triggers with a red fib shortly after. So what do? We go back to that exact same thing, right? And Ron says he's waited all day and got nothing. It's rare that that happens, but it does happen some days. So this is the exact same thing. Is you've got strong triggers 100%. But we're directly into one-to-ones. The triggers are below. No trades into the area. And this is where you guys are going to be tempted to say, look at all this momentum. I just have to jump in. I have to jump in because what if it goes without me? And guys, it's cool. Once again, sit on your hands and do nothing. That red fib doesn't mean anything until it's reached. Just a red line on a chart. It's an area that if price reaches it, it may reverse the market. It may stop the market. It may create an untradeable bounce. But the reality is, we just don't know. And then Rob says, so wait for a pullback on the 5-1 to pull the trigger? And guys, do you see how this is asking, do I break my rule? So should I break my rule here? Should I wait for a pullback? I've got momentum, but I don't have a clear path. I have to enter the market, right? Because, oh my gosh, I haven't made a penny in this whole move up. I should probably trade into a termination condition. Well, if you look left, you can see termination conditions jacked up your good time about 8 times, right? There may be something to not trading into lines. Does that make sense, everybody? I love this because this is exactly what all of you are thinking as you're waiting for a trade. This is exactly where everybody's brain goes as you wait for a trade. And Rob, you did an awesome job of cataloging it. And then this is what I love. When the small triggers broke above it, Rob, you probably said, holy crap, this has the potential to break. If I get a pullback directly to an area inside of triggers, well, I have an opportunity to make some money, right back to trouble. And Rob, I am over the freaking moon proud of you right now. Doing absolutely nothing when there's nothing to do, and all of that patience paid off. And you were able to make money. And guys, you have to believe that your money is coming if you just wait. Great job this morning, Rob. All right, Pete. Pete's got a little different plan than some of us. There's a termination. There is everything saying up. There's no divergence. There's a pullback to support inside of favorable large triggers. Where did you get in? 95, 95, right into the divergence high. And it sure enough did go up, and you took it from the bottom, right at the bottom of the window, and you took it right to the second divergence. But 2 divergences doesn't scare me. That's 50-50. You're good. I like it. Great trade. $600 got paid. My favorite phrase, got paid. Not the best large chart look. Odds favorable momentum at the beginning. One little blip and continued trending down. You enter on the little blip and you take it down to the next fib just about. Great job. Everything says down 75, 75. You let it get below trouble and you traded it to trouble. Nice job, Pete. Not a high probability trend trade at all, guys. What a great chart read, though. And once you begin to understand the flow of the market and see the patterns, you're going to find your money. Who is this? Sid? All right, Sid. Entry, odds favorable momentum, clear path. Exit. All right, so you entered and got stopped out super quick, and then you entered again, and you're hoping to go up because of momentum, because we're above stuff and every chart says up. Sid, how did it work out? Is this the second half of it? Guys, I love to see both. That's the same picture. Guys, I love to see the end of your trade. Show me the end of your trade. Show me what happened. Show me you taking profits or getting stopped out. Because this looks awesome, right? I'm going to put a picture and it's going to show me winning and everything's going up and that's badass. And I'm not going to talk at all about why I got stopped out here. I'm not going to talk about my stop placement or what changed from jumping in at 09, which was right here, and getting stopped out at 07, 2 ticks below it. What the hell made you panic? Let's talk through it. Let's sit on a bench and feed squirrels and talk about how you can stay in that trade with all of that momentum. Because, man, that was a good look. That was such a good look that other people took it and capitalized beautifully. Momentum, clear path, everything up. There it is. So, Sid, we have to talk every day until you can do this instead of getting stopped out. Great job, though. Both of you. Great trades. Great trades. That's 2 trades from Ron that look exactly the same. 0 deviation in the plan. Pete. Termination. Everything says down. You jump in for momentum. And when momentum died, you said, wait a minute. It's just a trend trade. Let me get out of trouble. I like it. So, Pete, are you in here, brother? Your best entry for this trade was right there at the fib, that momentum style. That's your best entry. The further you get away, the more likely it is to turn into a trend trade. That breakthrough snap back, 2-3 ticks risk, that's the one, man. That's the one Nexgen teaches. I love this look when it sets up. Termination, strength, break, pop, zoom. Trading from the area. The further I get away, the more likely I am to get a retracement. Great trade, though. And your ability to read charts is absolutely amazing, which is why that wasn't detrimental to you at all. Gino. Gino's got all the colors on his chart. Got to go with the mo. So how did that work out? Odds favorable. Everything says up. Pull back to the mid band inside of triggers. What's going on with your charts, Gino? Did that work out? Was that good? 2 divergences probably took out 2105. And then your small triggers are below, so I like the entry before that. But you come off the bottom, triggers roll, pulls back, get above. That was it from here to here. We're not even looking at the top. Guys, look at this. Termination, small triggers roll, pulls right back to the small triggers. Gino doesn't fight the small triggers on the NASDAQ, gets in on the correct side of them. Do you guys remember the lesson? Is that going to go bigger? That's not going to go bigger. Has anyone heard in this room before that on your entry chart, once you're in on the right side of those triggers with momentum, it's going to continue up until you get a close on the wrong side? I've done a lot of lessons on this one, guys. When your market is screaming up, as long as it doesn't close on the wrong side of those triggers, that reversal bar on the wrong side of the triggers, it's going to continue up. Gino knows that. Gino, this is awesome trade. Awesome trade. And I like all the Technicolor stuff. You got all the goodness going on. Did you take the Ale class, Gino? You did, because that's a 14-2. Freaking amazing, isn't it? Freaking amazing. Unreal. Amen. I've been practicing it for almost 3 weeks now, and I'm floored. I've been making about 1,500 simulator. I'm still practicing it. But I've been between 1,000 and 1,500 every morning before we start class from the very basic concepts. I love it. Guys, that Ale class is available to everybody. But if you don't know the basics, it'll be problematic. Gino, I love what you did there, man. I forgot. I lost my place. Here we go. Joel, let's see what you did. Momentum phase, everything says up, gets above. And then Joel, I am 92% in love with what you did here. And can I show you one little thing? The same thing that we just talked about with Pete. When it breaks and pulls back to the area, that's your best chance. Right here, we're still in the decision-making zone. But when it breaks and pulls back, that's your entry. And as long as we're on the good side, it's going up. Remember that if you're in a momentum trade, that's loss of momentum. Joel, this is beautiful. It's a beautiful trade. The entry, though, you're dancing. The bar you got in on is dissecting the key area. Letting it just get above, it typically pays dividends. Great looking trade, Joel. Really well done. Momentum for the win again. Josh. 3 divergences on the large chart. Odds favorable momentum on the large chart. No divergence on the small chart. You're getting in on the way down. It missed your entry. You catch it on the way up. Why did you exit? Little triggers above big. Why did you exit, Josh? You're in at 33. Your target was 43, and you gave it 2 ticks. It says close. Why would you close out there? Okay, that's fair. That's fair. If you had to get the baby, that's cool. I'll give you a pass this time. Nice trade, man. Nice trade, Josh. I get excited when you guys show me great trades. All right, Nanda. You closed here. You didn't have the nerve to hold. You entered too early. I don't know where you entered, but you entered too early. That's okay. Nanda, I'm going to say, just out of grins, just for fun, I'm going to say, Nanda, that you're going to get pretty comfortable exiting at multiple Fibonacci areas with weak triggers eventually. And that every move doesn't have to be a home run move. And I love it. You went up, everything said up. I don't have any idea where you entered or where your stop was or even where you exited. But exiting at areas, I'll support that all day long. Do you see how there's not a lot here for me to give any feedback on, Nanda? I got in here, I got out here. Why? What did you see? What made you do it? I'm going to give you this picture, and remember, guys, you never have an obligation to tell me why you're doing what you're doing, but I don't have an obligation to try to figure out where your entry was in this 7-point range. I don't have an obligation to help you with stops if I can't see where you got in, if I can't see where your stops were. I don't have any obligation to help you with exits if you don't tell me why you exited. I want to help you. I want to talk about all this stuff, guys. Give me the information so I can give you the best feedback. And if you don't need the feedback, if you're just like, check it out, I'm kick-ass, look what I did, that's cool. Say, Mark, this is a... Okay, but Nanda, give it to me on the chart, right? So why did you exit at the red line? This red line right here? Why not this red line? What's the difference? Because this red line created a bounce. Why would you exit at this red line? Why wouldn't you hold for that red line if you're going to hold through this red line? Does that make sense? I'm not trying to beat you up here. But closing out because you don't have the nerve is a rough plan. Because what if you develop the nerve, but it's still an exit condition? Your nerve is going to do you wrong. Your rules are always going to do you right because your rules are going to be patterns that win more than they lose. That's kind of the point that I'm trying to make. Guys, again, you don't have to tell me what you see, but if you do, I can give you the best possible feedback. Termination, strong triggers. You enter just above the mid band, and you're out down at the mid band. I like it. Did you notice that the large triggers were a full bar away, Cindy? Did you notice that this mid band is a 100% termination condition? And the pattern is, typically, it closes the gap. And you got in hoping that it didn't do it. But if you get in on the other side, you've got a little more peace of mind. Was your stop all the way up here? where the market shouldn't go? And these are the things that I ask. When I see the split trigger get in on the way up, I would just always ask, where was your risk? You knew where it had to be, but did you accept it? And if you accepted it, rock star. I like the trade, especially coming off the termination. That's great because of the termination condition. And the fact that you pointed that out, you know that it pays dividends. You know that it's better. Just a snapshot of your big account. Took a short in oil, several retracements, $1 million in equity. Can't wait to see those if I believe in trade. 44 ticks, $11,000 winner. Nice job, Pete. $11,000 winner. Did you get your Porsche? Did you find one? Everything says down. The path is clear. The scissors are open. The entry is good. The exit is solid. Bing, bang, boom, momentum, clear path. This is 3 for 3 on Ron, guys. The exact same look. This is what I want you guys to take. The people that are finding the highest level of success are doing the exact same thing every day. They don't need all the trades. They're taking the best trades. Great job, Ron. Great job, all of you. But that was his chart, so I'll say great job, Ron. Let's see who's next. Miss Cindy again. Miss Cindy says, there's that termination again. I love those. 2 divergences at the fib. I love that. Everything says up, odds favorable momentum, but I'm going to go short anyway because there was a white bar off the termination condition. Both of my triggers rolled, and this is a great confirmation on a range chart that that's likely to hold. And Cindy, beautiful. This is a white bar trade, guys, that uses a market flow chart that when a termination condition sets up and this pattern presents itself, Cindy, you killed it. What a great trade. And then it's just momentum all the way down. Again, just another trade that you guys are going to be able to take once you recognize a few key concepts. All right, Z-Robot, perfect. High probability trade. Let's see. I can't see your entry. You don't have odds favorable momentum. You're fighting momentum against you. Nope. Sorry, Z-Robot. Notice that you didn't write any rules on it. Or maybe you did. You wrote your rules. 79 degrees. Go swing them. Have a good. Hit them straight. So I don't know what happened on your small chart, Z-Robot. I love the look. Don't get me wrong. I love the look. But you're not allowed to call it a high probability trend trade. Because I want you to see your entry. Trend down, triggers down, everything says down. The only thing that I'm going to say is that it's not a high probability trend, high probability. What I am going to say though, and I will scream this from the top of my freaking lungs. When price reverses but not from a key area, the most likely expectation is that it's going to continue in the direction of the overall trend. No impactful decisions, just some sellers testing the market. When price reached Fibonacci support, the large triggers were more than a full bar away. Another pattern that says price is likely to close the gap to the triggers. So Z-Robot, you took a brilliant chart read and capitalized. But I can't call it a high probability trend trade because if I look at your large chart, it looks like it's fighting a lot of stuff. But with a little bit of chart reading understanding, it's really fighting nothing at all. Brilliant trade. Awesome result. Absolutely beautiful. Just not a high probability trend trade. Does that make sense? Awesome. I love this look. I trade this look too. I'm a fan of it. All right, Joel. Everything says down, broke through the area, momentum is there. Place the sell stop for confirmation. Out of the fib. Joel, freaking amazing, dude. Weak triggers, clear path, room to the area. Just jumped in for the hell of it. Should have taken small profit with the reversal bar, but wished in one hand, pooped in the other, Pete, and the other one filled up first, didn't it? Happens sometimes. That's my That's me channeling my father-in-law. My father-in-law was very country, and he used to say it in the most country voice you ever heard. Boy, wish in one hand, shit in the other. Tell me which one fills up first. And that's it. If you're just going to jump in, have a reason for exit. I like it, Pete. You know I don't worry about you. Don't worry about you. And guys, when you make 11 grand on your short trade in crude oil, you can blow through 700 real quick. All right, Steve Diego, odds favorable momentum, clears trouble, easy money. Both Pete and Joel, do you see how instead of getting in on top of the area, he let it break and pull back to the area? I'm telling you, that just makes trades easier. It really does. It makes trades a lot easier. But momentum and path, quick hits, $200. And Steve, I actually tried to send you an email yesterday about these, but it bounced. All right, momentum, and on the NASDAQ, these pink 1-to-1s are not a clear path. You don't take the trend trade. You get in on the right side of the triggers, and you make money. I like it. Everything looks good. And then price continues up. Anything can happen triggers. So you clear trouble. You didn't take the mid-band, but you could have. So you just get in once you get above everything and make it all the way up to the 1-to-1s. Really nicely done, Steve. Same thing. Everything says up, room to target, get in, get out before trouble. Everything says up, get above trouble, get in. And that one you held. And you don't usually hold those, Steve. This is me recognizing a little variance. Typically, you're in. And this takes you out. And you said, wait a minute, everything says up and it's strong as all get out. It's just a trend trade. I'll keep my stop in place. It's not a lot of risk and take it up there. Terms matter. Amen. Nice trade. That was the last one. So momentum, everything says down. You missed the good stuff in the middle for whatever reason. Everything is slowing down a little bit, says down. You get below the divergence, so there's nothing in the way at all. And you're out, 210. Beautiful trade again. Let it clear trouble. Why? Because trouble creates bounces. Guys, trouble can create a bounce. Everything says up, momentum, let it break. You're in, you're out. It's beautiful. Beautiful. And then it turns into one of those 50-50 trades. And that just continues up beautifully. Man, Steve, putting on a clinic, brother. I thought you had one from yesterday that didn't work. I thought you had one you got stopped out on. I guess not. Great trading, dude. Great trading. Consistent. Odds favorable, momentum, clear path. Odds favorable, clear path. Odds favorable, clear path. Over and over and over and over. Waiting to pass the red bar. Waiting to pass the red bar. Why is it not momentum and clear path here? Great question. Okay. All right, Nanda. First things first. There is a distinct difference between momentum and path. So momentum is strong triggers. So momentum is only triggers. And then path is the relationship of the triggers to an area. Do you see how your small triggers made it through the area, but your large triggers did not? This is the look that I want you to recognize. With this look, that fib has the potential to break. And fibs can break all the time with momentum. But I need you to understand that it's not a clear path because it's only the potential to break. Does that make sense, Nanda? Cool. So what you run into is right at that key area that only has the potential to break. Whoops, wrong one. We had a loss of momentum. Area is less likely to break. We had a second loss of momentum. Area is even more less likely to break. When I get another loss of momentum, it's even less likely to break. So you had the momentum on the large chart. The path wasn't quite clear, and your small chart started giving you these indications that we're losing momentum right at a key area. Does that make sense? So it's not just the red bar, it's also this bar. And until the triggers get north of it, it's not broken. Good stuff. So if you wanted to trade that potential, Nanda, didn't really get a good one, but that was about the closest right there. Is take that little snapback right back to the fib. Price gets above, back. We've talked about this a couple times. And then when it closes on the wrong side, the momentum's gone. So great stuff. Great lesson. Thank you for the annotations on there. And we made it through all the pictures, guys. Good job. What's going on over here? Weak triggers and it didn't go down. Weak triggers and it didn't go down. Resistance and it stopped going up. Larger up, smaller down. That's kind of a, that's not my best look. Wayne. All right. We saw this one yesterday. Did you mean to I think I saw this one. So gap with the triggers up. So the gap comes into play, Wayne, when you hit an area. It is a gap, without a doubt. And you did have an area on your 8 range, not on your 5-1. Divergence, divergence. Everything's above. That's below. And you waited for just the pattern. You waited for the strong triggers, for these to roll. Look for an opportunity to close the gap. 93.25, and then your gap was at 94. So you had 5 ticks from your entry to get to the triggers. I see exactly why you did. I love your patience. Love your patience. Just not a lot of room to make money. I like that you didn't hold for 36 ticks though, which means that you're starting to look at your entries and your potentials, and you're focusing on getting paid if something goes sideways. Like it. Good job. It's a different trade, right? It's a different kind of trade, but that understanding that price returns to the large triggers creates opportunity. Nice. Nice, nice, nice. Guys, give me just a second. I need to open up the back door for my puppy dog. I'll be back in 2 minutes and then we'll finish strong. Ellie says good morning to everybody. All right, Steve Diego. Cool. And this is the one. This is cool. And I wanted to see this one And I wanted to talk about this one. I do that too, Sid. Yeah, my puppy. And the reason I wanted to share this one, Steve, and I was looking for it, is because you had momentum. And you had a clear path. And this trade fit your recipe 100%. This trade was everything that you look for. This trade had all your rules met. This trade had the advantages that you insist on, and it lost. And it happens. And that's really what I wanted to say to everybody, is it happens. You're going to lose trades. The most accomplished traders in the world are going to lose trades. The best plans in the world are going to lose trades, guys. Make sure that you're losing the correct trades. And that's, I guess, what I really wanted to say is that good job following your plan. And it sucks to lose. Nobody likes to lose. But once you accept that it's a part of it, and man, you didn't hold on for dear life. You said, whoa, I'm on the wrong side of everything. I have to get out. Thank goodness this wasn't one of those looks where you held on for the trend trade, right? But that's why I wanted to see that one, Steve, because I think it's important, especially for the newer users to understand that trading involves winning and losing. And you can't base your plan on this one trade that didn't work. You can't change your rules. You can't change your plan. You can, I guess, but it's silly because that one didn't work. But that one produced winners, and that one produced a lot of 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 winners. And that one followed the exact same recipe and gave a loser. And I'm going to tell you that there's a lot of people in the world that will never accept that all the winners were a great plan, but they'll say that there must be something wrong with my plan because I took a loss. And they'll forget about the 50 trades before it that won. So I'm very passionate about the idea that it's okay to take losses. Take the correct losses. That's it. Dude, it was beautiful, Steve. I would have lost that one with you if I was trading your plan. All right. Price reached divergence low, and the triggers remain above. Clear path? What do you guys think? My rules say no short trades into that area. My rules say if price reaches a line and the triggers remain above, it's not a clear path. Let me show you kind of a cool thing about what divergence means to you. And I'm gonna blow this up really big. So divergence is one of the most ignored. One of the most ignored termination conditions. So right here, the sellers were pushing down, guys. They were pushing down and pushing down and pushing down. And right at this exact spot, the buyers said, we want to go up. And they started going up, and they started going up, and they started going up. And right here, not only did we get the realization that the buyers are pushing against everything the sellers wanted, but right here in the middle of that second bar, there was confirmation through some background running indicators that the buyers also stole the momentum from the sellers, that there was a loss of momentum in that push down. Does that make sense, everybody? And the buyers continue to push all the way up to that mid-band. And right here, the sellers said, we really weren't done. We didn't get to where we wanted to be. So we're going to fight you, and we're going to push, and we're going to go down. And the sellers reached that divergence low. And that divergence low where is exactly where the buyers said, sellers, we told you no, we stole your momentum, and I've drawn a line in the sand. And if you come back to this line in the sand, there's the potential that we're going to push back even harder. This is what we call a pivot stop out. And there it goes. And there it goes. So guys, divergence highs and lows are points where the guys winning lost, where the momentum went away, and this line is literally a line in the sand that says, I triple dog dare you to try to go lower. And very often they'll let the sellers get a tick or two below, make them think they won, and then they'll just unload everything. And guys, that is why divergence on its own is not a termination condition. But when price reaches it and the triggers remain above, you have to respect it. And if I get 3 divergences in the same price range, the same way it's a termination condition on the small chart, it is on the large chart. Good stuff. Good lesson there. Thanks, everybody. All right, Wayne, NASDAQ. Everything says down. Oh, look at that. Right into one of those termination conditions that creates a giant bounce. And I don't know where your entry was, but you had to sit through some serious retracement. Oh, no, here we go. Let me see it. So you entered, sorry, sell limit, pull back to large triggers that had rolled. Okay, I like that. Set stop 3 ticks above all the triggers, got in a little lower than you should have, but the market moved faster than you could place the trade, 36 ticks. And then second target just below the 1-to-1s, since NASDAQ overruns slightly at times. Sometimes it bounces right off of them. Nice trade. It took me a second, Wayne. But yeah, they danced on the way, didn't they? Why a 21-3? And just for grins, Wayne, so you've got a 21-3 as your large chart, which is cool, no worries. But you've got synthetic triggers from a 34-5. And they said up. Do you see how you get some conflicting stuff? Now you've got 4 time frames worth of information on 3 charts. So I'm totally cool. Use... No worries. So this is supposed to be a 34. Is the traditional, the way it's set up. You can use a 21. I think what happened is you use the range for the large. Possibly. So if you right click on your large chart and go to templates, your NASDAQ large chart should be the 34.5 dynamic Renko bar. Did anyone notice that all of the triggers are below resistance? And rule number 2 is defining a range. How do you recognize the 34.5 on the 21.3s? Joel, what I saw was that he has a 21.3, he has a 21 range, and he's using the 13.2. Look at the large triggers on the 21. Look at the synthetics on the 13.2. He still has 34s. I just know because that's the template. That's just being familiar with the software. Oh, okay, yeah, that'll do it every time. No worries. I just noticed these things, Wayne. I've been looking at the software for so long that it jumps out at me sometimes. It doesn't mean that your charts are wrong. It just means that I noticed a discrepancy and thought I would bring it up in case it was an accident. That's it. That's all. Sorry, I had to type something there. It looks way better on entry now. I bet it does. I bet it does. Guys, we got 30 minutes. What do you want to talk about? What do you want to talk about? What makes you happy? What makes you tick? What do you need to know? What's that thing you're like, man, if Mark would have talked about this, I would have been a super duper trader today, but he didn't. Stupid Mark. All you got to do is ask, guys. Hey, Mark, I'm working on a new plan. Here's a picture of it with the rules. Will you give me your 2 cents? Hey, Mark. I hate that short. That short sucks. Wait, no, I'm just kidding. It doesn't suck. I don't tell people that it sucks. Dude, that is odds favorable momentum, potential to break. Everything says up, and you went short. So on this chart, Wayne, it looks redonkulous. But when you realize that you had multiple divergence and just the potential to break, and you had an HVA line, and it was only the potential to break, and you take the pullback because it was only the potential to break, boy, you've got to look at those two charts to make that one not look silly. Great usage of putting it all together. I think it looked better on the 21 chart, to be honest with you. So Cheetah, sometimes during the process of price developing, even if it's odds favorable momentum, but it just reverse instead of a pullback. So it just keeps going up, Cheetah, or down with the momentum. Can you show me a picture of what it is that you're thinking? Or are you talking about sometimes, let's see if we can find an example. Sometimes everything says down and it just goes up instead. Okay, so let's do this. Let's find one with odds favorable momentum, where everything set up and it went down instead. So let me put a box on there so I can find it. Cool. I got you, Cheetah. This is why pictures help me, because I'm so artsy-fartsy, it gets hard for me to visualize sometimes. And that was a while back, but that's okay. Let's go find that box. There it is. So check it out. You're going to love this, Cheetah. Oh, man. Something like this, right? Where the large chart has odds favorable momentum, 100%. It has a clear path, 100%. Life is good on the large chart here, Cheetah. Reversal bar prints. Price may return from the top of the triggers to the bottom of the triggers. Price may return from the top of the triggers to the bottom of the triggers. Cheetah, what's one thing that you can tell me about the location of the midband? Is it inside of triggers or is it on the wrong side of triggers? It's on the wrong side. Absolutely. So rule number 3 is not met. So Cheetah, if you said, I'll take it from the midband, it's only a tick or two, give me one of those up bars. Give me one of those confirmation bars. Give me one of those bars that say it's going in the direction of momentum. It's going in the direction of the clear path. And you never got it from the areas even close to the triggers. And then if right here you thought you were going to go long, do you see how the large triggers are down, 3 divergences? So you're going to see it a lot And that little bit of language, Cheetah, area inside of triggers, pays huge dividends. And then what I kind of hope for you guys is, let's go down here and look at this one, is that you never miss this one that is odds favorable, clear path. And even if you waited for the confirmation bar, it's pretty easy, and it gave it to you right off of that area. So one of the things that you have to be able to do is you have to be able to take this one. Because Cheetah, if you miss this one and look at it 2 minutes late and say, crap, that was the perfect trade, you're more inclined to take the not perfect trade. Does that make sense? I hope that makes sense. When you miss the perfect trades, that sense of regret and remorse, you're more apt to take the wrong trades after. But if you always commit to the language, I have this, I have this, I have this, I have to take the trade. I don't have this, I need to sit on my hands. What you'll find is you'll stop missing this one and you'll stop taking that one. So here's one, 50-50, odds favorable, potential to break. There's an area inside of triggers. That one worked. And then it decided to come down and probably stopped you out. Does it mean that the plan's not a good plan? No. It means that the sellers had one more fight in them. So when everything rolls, you can look for another opportunity. Because it went up and then it pulled right back to support inside of favorable large triggers. And so what happens is you're going to lose the perfect trade. You're going to win a few crappy trades, but the goal is to be consistent so that you're always taking the same trades, because then you at least have some sort of expectation on whether it wins more than it loses. That was a great question. It will turn from the middle of nowhere sometimes, Cheetah, but you can use some of the clues, especially from the rules, areas inside of favorable large triggers. You can also use the idea, let me open this bad boy up. When you are in the middle of nowhere and everything is screaming, you can use that's going to be one of your indicators as well. Is the more divergences you get, the more it's slowing down on the small chart, and you just can't see it yet on the large chart. Cool. Good stuff. Guys, I'm telling you, these are the things when you're just like, hey, Mark, let's talk about this. I'll give you everything in my brain about it. I'll give you everything I have to help you with that. So right now we have odds favorable momentum, don't we? You guys see it? Right now I have a clear path. All of my triggers are above resistance, and I haven't reached the next area. Ladies and gentlemen, this is the perfect look to wait for a reversal bar. If I get a reversal bar, price may return somewhere in this range of the triggers. Price is most likely to bounce at this mid-band inside of favorable large triggers. If I get a reversal bar, the only thing that would ever keep me out of this look would be 3 divergences, but I don't have it. Which means, guys, this is my setup for the high probability trend trade. I still haven't even gotten a reversal bar. Does that make sense? This is what we talk about for the first hour every morning. This look right here. I've done everything that I can do. I've been in control of everything that I can be in control of. The only thing I can't control is whether or not I get an entry. That's it. That's it. I can't make them come get me. I could jump in, right? I could just say, oh, look at that. All the momentum, everything's up. As long as I don't get an exit, as long as I don't get a close on the wrong side of the triggers, I'm just going to stay in this trade. And guys, what happens on this look is it's okay, right? You're in, there's momentum, everything's up, we look good. But if I get a close on the wrong side of the triggers, that's a loss of momentum. That's the wrong side of the triggers. I don't want to be in that trade. And if I get a reversal bar, I have to rethink and say, all right, now my higher probability entry is going to come from an area inside. Do you see how it's 2 different trades? One is based solely on momentum. That's my advantage. A close on the wrong side of the triggers would be forfeiting that advantage. What a great reason to exit. But just because the momentum trade fails doesn't mean that the rules for the high probability trend trade aren't true. Does that make sense, everybody? If I know what my advantages are getting into the trade, I can identify when those advantages are gone. That's management. Management has nothing to do with hope. Management has nothing to do with your fears, your feelings. Nobody cares about your feelings in the market. They hope your feelings are fear because they need someone on the wrong side of their great trade. So we're going to do this. If momentum keeps, never get a close, I'm going to stay in this move. Every time my reversal bar marker moves up, so will my stop. If I get stopped out because my rules are met, guys, I'm going to leave my buy order there. I'll take a high probability trend trade. How cool is this? And you want to know the kicker? Is there's going to be times when both of those lose. And man, you're going to be mad. You're going to be mad. You're going to think the market hates you and is against you. But the reality is, guys, not everything wins. And you have to be willing to accept risk. Uh-oh, reversal bar moved. There's less risk. Look how much it fluctuates on that small chart. That's some anxiety, isn't it? It's up, it's down, I'm winning, I'm losing. This is great, this sucks. Oh my gosh. Maybe I should move my stop. Maybe I should move my target. Anyone other than me ever do that? Guys, every time I say stuff like that and it sounds ridiculous, it's because I've been ridiculous in the moment and done it. I've got momentum and a clear path. I jumped in just for the hell of it. If I lose momentum, I'll jump out. It'll take me out on that loss of momentum right at the reversal bar marker. But if it takes me out on the reversal bar, I have to say, here are my triggers, here's my area. That's my high probability trend trade. Some of you might say, that's cool. Instead of getting out with a loss of momentum, I'll put my stop where the market shouldn't go below triggers. I'm willing to risk it. Me personally, I don't care for that much risk. I'm kind of a sissy. My job is to have the least amount of risk with the absolute highest profit potential. I don't need to be in every move. Whew, man, it's bouncing. I wonder if I'm going to lose. I don't know. Does it help to see this, to talk through it? I don't mind doing this, guys. Simulators where you learn. Simulators where you test theories. Simulators where you practice things that you're not comfortable with. Simulators how you get good at stuff. And guys, I don't care if I lose because it's just pretend. I've never been evicted from my home because I lost at Monopoly. Okay, Wayne, we're looking at the S&P. NASDAQ may say something different too. Yeah, that would be alarming if this were if we were looking at the same things and going opposite directions. I've done that. You notice how it never closed below that trigger line? Do you guys see that? It threatened. It missed us by a tick, but it still hasn't done it. Oh, there it is. I'm out. So now, with odds favorable momentum and a clear path, if I get a pullback to an area inside of favorable large triggers, that's my next trade. We'll see if it happens. Is everybody down for the whole how do I create the window of opportunity from the highest point of the triggers to the lowest point of the triggers? From the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. That's where the market may continue. The sad thing is, and this happens sometimes, is it might just run up here without me now. It might have stopped me out and they're still going to leave. But I have a plan. And my plan says, close on the wrong side of the triggers. And you guys want to see something? That close wasn't on the wrong side of the triggers. Son of a gun. I broke my exit rules. It's okay. We'll see if it turns into a trend trade. I've got a mid band at 20, 60, 20, 75. So 2 ticks above is 25 for me. If I get into this trade, ladies and gentlemen, my stop goes 5 ticks below the triggers. I know my risk before I ever enter the trade. That's it. That's all you can do. Learn a pattern, follow some rules, understand that you're not in control of the outcome, and I'm going to laugh my tail off because that close was not on the wrong side of the triggers. It looked like it. It looked like it would have been, but it wasn't. So I got hornswoggled there a little bit. What do you guys want to talk about? Look at that termination. So let's see. Termination condition, no momentum, no clear path, termination condition, termination condition, termination condition, termination condition. Thanks, rule number 2. I didn't have to lose any money while crude oil consolidates, while it gets stuck in a range. They're still just dancing, right? Man. We'll see what happens. I don't know. Why 1-to-1 yellow bar indicate above now? Where are you talking about? Why is this above? Is it this one right here, Nanda? Cool. So that's what's called a reversal bar marker. This shows me the exact price where if this bar goes up, it will become an up bar. The same way right here, this shows me the exact price where if this bar is going to be a down bar, where it has to get to form that bar. So these are nothing more than reversal bar markers. They just let you know where the most current bar will close in the opposite direction. You're welcome. Good question. And you can use those, you know, if you need a reversal bar to enter the market, you know exactly where that reversal bar is going to print. And that becomes helpful. See the bottom of the bar, Kurt? 62, 22, 25. Once it hit that price, it formed the reversal bar. That's where the bar closed. So once the bar closes, that's when it goes and starts printing the next bar. So this bar closed right at the top and started the next bar. This bar closed at the top, started the next bar, and so on. This bar closed down as a reversal bar. Technically it did not, but my reversal bar marker was below the triggers, and I don't think we took a picture of it, did we? Maybe we did. Let me see. No, we didn't take a picture of it. But technically, my reversal bar marker was below the triggers. So I used it. Because I'm not going to split hairs over a tick. You could, Kurt, you could do whatever you want, man. You could put it 23 ticks below the reversal bar marker. But when we entered this trade, Kurt, my reversal bar marker had literally shown itself to be below the triggers, and that's exactly what I used. I have zero regrets about my exit. All I can do is read my indicators. So, Kurt, if you come up with a plan that says, hey, I'm going to do 2 ticks just to be sure, that's cool. But you might get 3 bars against you or 3 bars in your favor. It's still dancing, right? Is it coincidence that it's dancing right where there was a loss of momentum previous? What do you guys think? For you guys that try to take Ron's trade, one of the rules says get above any lines. They may get us on the pullback. Guys, this is literally what trading is. Let me activate my limit order and wait. Let me activate my limit order and wait. All right. Odds favorable up. Miss Clara, not a clear path. Large triggers had not broken above the fib, so it's not a clear path. You did have a strong bottom from the midband. You had divergence. You didn't wait for the areas inside of triggers. You jumped in right at the very top, right above the fib, or even the midband would have been better. And then you were in at 1850. And it got you. It ultimately got you. It was a 50-50 with divergence. Oh, look at this. They came and got us 2019, 1875. So that was your 50-50 with divergence, and it pushed lower. And now this is your odds favorable clear path, pull back to the midband inside of favorable large triggers. My stop is where the market should not go. My targets are at 100 and 200. And the only thing that's going to get me to move this stop is if I get a reversal bar. And check it out. I won't get a reversal bar until 23 flat. So it's either going to stop me out or it's going to give me a reversal bar. I never know what it's going to be. Is everybody cool on the rules? And Clara, do you see how it went from a medium probability, has the potential to break, and divergence is pretty rough on that, and it pushed it lower. And now we have odds favorable and a clear path and the area inside of favorable large triggers. And our stop is where the market should not go. Cool, awesome. And it takes some repetition. And guys, I don't have anything to do. But because it's strong triggers, because it's a clear path, 2 divergences is not a deal breaker for me. 2 divergences, hell, that divergence hopefully is what it took to get me down to my entry. So we're in a high probability trend trade right now. You guys that jump in, if you held on to that forever, you lost a lot of money. I insisted on my advantages. I pinpointed my entry. My stop is where the market shouldn't go. There's nothing for me to do right now, guys. It's either going to go to my first target or I'm going to get stopped out. And they're going to have to come get me 5 ticks below those midbands or below those triggers. They're going to have to come get me. That small crowd is going to have to push all the way down to here before I'm willing to exit this trade. And I am comfortable taking a loss if that's what my future holds. Because the pattern that I'm trading has been proven to win more than it loses. The pattern that I'm trading is a trade that typically wins 70 to 80% of the time. I don't get to pick which ones win and which ones lose. So every time my rules are met, I'm obligated to enter the market. It almost seems too basic, doesn't it? Are you telling me that when the triggers look like this and there's nothing in the way, all I have to do is get in here and wait and see because I'm not in control? That's it. Let it be your focus, guys. Because once you get good at this one, you're going to start seeing stuff. You're going to start seeing more opportunities. You're going to always speak to yourself in terms of momentum. You're always going to understand clear path. You're going to be able to pinpoint that entry, where the market shouldn't go. And we're just going to ride this one out. We're either going to finish class with a loser or a winner, guys. I have no idea which one it's going to be. Ooh, hold on. I think I know how to figure this out. We'll consult the oracle. Will I win this high probability trend trade? Let's see what the Magic 8 Ball says. They say definitely. That feels like a solid trading plan to me. Let's see if the 8 Ball's right today. But that's about as accurate as you'll get on your guess, guys. You'll never know. You'll never know what's going to happen. You'll never know if it's going to go up or down. But if I take this exact same look 10 times, I'm more likely to win more than I lose. And look at all that fluctuation. Oh, giving me heartburn. Is it hard for you guys to sit through this when it takes this long? Is it difficult? to watch it go up and down, up and down, up and down. This is when, guys, when I enter a trade like this, I get into this constant state, right? Kurt, this is where you're saying, I have momentum and I have a clear path and I have an entry in an area inside of favorable large triggers, and my stop is where the market shouldn't go. No, Nanda. I have no idea what it's going to do. If I get divergence inside of the triggers, who cares? It's just a loss of momentum. That's it. Has nothing to do with anything on this tiny little chart. I know, that's frustrating. It's frustrating having to admit that you just don't know. One divergence on a 5-1 may not be what it takes. It may come all the way down and stop out 17 and then have to roll and go back up. I don't know. The only thing I'm sure of is that my rules are met for a high probability trend trade. And what keeps me in this trade is I continuously talk to myself. My triggers say up. My triggers say up. My path is clear. My triggers say up. My path is clear. My triggers say up. My path is clear. My entry was right. Everything is in favor of this trade. Everything is great for this trade. Everything says this trade is more likely to go up than down. I want you to see what I just did, Kurt. I did this for you. My brother used to do this to me. And I'm going to crash my charts for doing it. There we go. How do you feel about that trigger look? How do we feel about that? Man, children will sing songs about that trigger look, Kurt. Feels good, doesn't it? We were down 150 bucks at one point. And half of you jumped out because you got scared because it took too long, right? We still might lose this trade. But if I get a reversal bar, I'm going to lose it less because that's going to be my first stop placement. If I get a reversal bar, then I move my stop. If I don't, I'm going to get stopped out. Guys, this is day trading. Market doesn't care what I want. The market couldn't care less what I want. So Josh, what's the only other thing that may take me out of this? A third divergence? Oop, there's my up bar. 1, 2 ticks below. Oh, that's the wrong. There's $100 right there, guys. That's my $100 target. I've got crude oil on an S&P chart. We would have been hit and probably filled, but that's okay. We're going to do it this way. So Josh, the only thing that would get me out of this trade is a third divergence. And until that happens, I got to man up. Because look at that large chart. Look, whoop, there's my first one. I'm break even. I have to get to 24.25 to make this a $300 trade. I have nothing to lose. I've been paid. Everything says up. My triggers are screaming. If divergence prints, I'll already be out. Guys, the only thing I'm ever in control of is whether or not I follow my rules. Are you following me? Kurt, are you glad you didn't jump out when you were down 120 bucks? Look at it. Beautiful. Go, 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 go. Somebody do the up dance. Somebody do the up dance. Go. Oh, it's so close. Maybe I should move my stops. It's almost there. Maybe I should move my targets. Oh, it hit my target. It hit my target, but it didn't fill me. Oh, man. Trading is so hard. But wait. I'm above the small triggers. The large are up. The synthetics are up. The momentum is insane. My dog just came. She's like, what's wrong, Dad? Man, they're going to have to come get me. I refuse to move my stops. Hell, I might even move my targets to the fib. Nope, I'm going to follow my plan. And guys, it hit your target, it didn't fill, right? So you know it's possible. I don't know what'll happen here. We're just going to let it run. What a great way to finish the week. The perfect trade, the perfect entry. And guys, what happens when you just jump in arbitrarily? You run the risk of missing your perfect trade. What happens when you just jump in? You could miss your perfect trade because you're so butthurt about the loss that you don't take the right one. Pretty cool, isn't it? The only thing would be 3 divergences. There's potential. I'll be out before it prints, though. I'm going to put my 13.2 template back on. And guys, once you break outside of the very basic KISS plan, you may change your stops. You may change your targets. You might change the way you look at things once you can read your indicators. It's going to freeze it up as it's loading. Steve Diego, one last trade. Let's check it out. That one's either going to win or break even. Doesn't matter. Oh, Steve Diego. You didn't have any room. You just didn't have any room. And I see what you did there. There's just no room. And then you held it, and it turned into the mid-band, so you just added on, and it made your target. You knew right where the market was likely to go. That's heartburn. That's heartburn for me. To miss a fib by a tick or two, and then go that far in the hole, that's scary. But you killed it. Mid-band, almost favorable large triggers, but without the strongest momentum and only the potential to break, and it was so tight. And then you got a divergence, and you still held it. And then you hit it, and you still held it. Steve, that's not your normal trading. That's not your normal plan. You usually have room to your targets. You usually don't hold through two divergences right from a fib. That's not normal for you. I like it. It's a great hold. You knew where it was going. But even after it hit, you didn't exit. Thank goodness it bounced. It said, Steve's a cool guy. Let's go back and get him out of this trade before things go bad. Look at this, guys. On 137, 150. Did I do the math wrong? Oh, that's 21. We got to go to 25, 25. I almost messed up my profits. We have to get all the way up to 25, 25, not 24, 25. Where are my math people? And Steve, doesn't it suck that I can look at your charts and know that you broke your plan? That I can look at your charts and go, Steve, that's not your plan, brother. That's not your exit conditions. Oh, look, momentum's still winning. 175, 187.50. Guys, we are so close. We are so close. Come on, momentum. Come on, right side of everything. Come on, trigger lines. Come on, rules. The KISS plan says hold for break even. The Mark Novak plan says this could be trouble. I'll let a reversal bar take me out off of a divergence high. But the large chart says go, so let's follow the KISS plan. All we need is one tick, two ticks, one tick, two ticks, boom. $300, ladies and gentlemen, per the plan. Congratulations, you're in the classroom that teaches this every day. Is anyone cool with 75 grand a year if that's the best you do every day? Was the wait worth it? Was it worth it to not to take the wrong trades? Was it worth it to not fight momentum? Was it worth it to wait for the clear path? Was it worth it to not be in the market every second of the day, but rather be in the market when the advantages are their largest. So take this picture. Take this picture and do this. Odds favorable momentum. Clear path. Rules met, look for an entry. Pull back to an area. Area inside of favorable large triggers. Follow my plan, it works. And make sure you misspell stuff. Remind yourself that you're human. Anna B, you have a wonderful weekend too. Guys, get that trade. Go to your spreadsheet. Open it up. Go to favorite looks and drop this look in there and commit it to memory. And say, never miss this one. And that's how you build a plan. I'm not all seeing. I just know patterns, guys. And to be honest, I did have a little help, guys. The Magic 8 Ball told me. The Magic 8 Ball told me that this one was gonna win. But does that make sense? So if you're brand new, let's finish like this. If you're brand new, tell me that this makes sense. And if it doesn't make sense and you're not telling me to explain something, shame on you. Because that's what I'm here to do, guys. This is the one. Catch 2 or 3 of these a day. You'll never work another day in your life. Because you're not going to be on 2 contracts for your entire life, guys. You're going to go to 3 contracts. You're going to go to 4 contracts. Why is a KISS plan only $200? Because, guys, that's it. And look, there's your push right off of it. There's your third divergence right there. But if you took the right trade, you made $300 before the divergence. This is what I do every day. Take advantage of having me here. Take advantage. Ask questions. Point out things. Stop trading. Stop trading in determination conditions. Cheetah, 3 divergences in the same price range. If you miss the right trade and you're trying to get in after a third divergence, you're fooked, man.